he can pick up or whatever else. Yeah, I'll get started. Hi guys. Hi everybody.
Hey, hey.
Yay.
All right. Well, I am an analyst that is exclusive here at Honeycomb. So this is the Discord where you're going to find my swing trades, a lot of our day trading, those type of things. So KT, I would mute. You're getting back. I'm hearing myself in yours right now. Feels like I'm back. Okay, now I can't hear it. Sorry, guys. Anyway, so I'm going to screen share. We'll get started. So if you are ever looking for any of my trades, this is the only place you're going to find them. A little bit of shameless plug. What I'm going to go over today, I know we have a little bit of trading psychology as well with Eager Beaver Lindsay here, but I'm going to go over a little bit of the psychology as I go. And the first thing I'm going to do is I get a lot of questions because if any of you are familiar with me on Twitter or X, I do a lot of swing trading where we have these really large gains, 500, 600, 700%, whatever it might be. So at that point, I want to show you kind of my strategy on how I pick my contracts, the setups I like, and how I could kind of identify what we're looking for on the setup. And the first part of that is going to be for what I personally use is it's an app called Option Strat. All right, this is the app I use for going through my trades and really identifying what type of trade I want to use. And we'll get to that in a minute. But for right now, I'm going to go over measured moves and how to kind of predict how far a contract, how far is a stock's going to go in a certain a certain time period, which basically is how we can kind of validate holding onto a trade 30 days, 60 days, identifying between a reversal and a continuation, not cutting yourself off at the knees. And a lot of traders have that instance where the second they see green, they're abandoning the trade altogether, 10%, 15%, whatever it might be, and we're out of the trade. We're so, a lot of us have been beat up so badly trading that anything green, we want to take it immediately, because if we don't, we're going to end up losing. Or we've got this other half of trading psychology. We've got the ones that take the profits immediately, cut yourself off the knees, and strangle our trades. And then we have the second part. That's the traders that I had 60% on the table and I didn't take profits, and now I'm red the next day. I just can't seem to get a trade that works out. All right. So we have these two different aspects, these two different echelons of trading psychology. And that's why I always tell people it's really important to understand who we are as a trader, because if we don't understand ourselves as a trader and our personality, it's not going to help us. If I'm one that always holds on to contracts too long and lets them go red, I'm not the person that needs to be worried about how to not have that fear of cutting right away. Whereas the trader who's cutting right away and has that fear, they don't have to worry so much about that greed of wanting more, and it's not enough. So, there's two ends on the spectrum. It's the spectrum, in my opinion. You've got the fear end and you've got the greed end. And those are like the two, character defects we have in trading that naturally come out. And the algos and the bots and trading in general is set up to exploit both of those. Understands our max pain threshold. Everybody that says the second I sell it, it always works out. It always pops back up. Those type of things. That's because it's man versus the machine on this, essentially, and the machine has the money as well. So anyway, we always want to. How do we eradicate that? How do we make sure that we can trade the most like the computers, the most like the bots, the most like the algorithms as possible? And that's by setting up, understanding the psychology of the chart, understanding the personality of the chart. Because when we understand the personality of the chart and what we can predict what it's going to do with data behind it, we're cutting out half of that psychological part that can really shoot us in the foot. Because as human beings, we have to act the most the furthest away from human being as possible to be more successful trading. We have to really identify that part. So I've got a couple charts up here, and what I'm going to do is I'm going to show you, if I pull up, I'm going to show you a couple trades. If I was to pull up my Discord right here, I'll slide it over to this side. This is my personal pick page right here. This is where I post my swing trades. Also, I have exclusive WhatsApp swing trades as well. We got to do a shameless plug. I mean, KT's giving this away for free. So I really want to show you what you're getting in this Discord really quick as well. All right, so you can see as we go through these trades, these are big hitter swings. These are, 90%, 100% with share options. And as you can see, if we look at this SoFi right here, we're talking about the company. We're doing shares, calls, and debit spreads, all three. How do we get that signal? How do I know when to open the debit spread? How do I know when to open the calls? How do I know when to open the shares? And then as you can see right here, down here, this is all three, this example of all three having that. And we give the charts and but as we go through, I'm really trimming along the way. And the way that I truly show how to do that is, and this is, I show the losses too, of course, but it's these trims and identifying on the chart those levels we're looking at, because I do specifically 100% unequivocally the same exact setup every trade. And these are just a couple things I like to use with the trade. I'm going to go for Firm and Coin. These are two that had insane profitability over the last couple months. And these weren't profitability like, oh, the whole market was green type profitability. No, this was a lot of sector rotation too. As tech led the charge in October into November, and we had the Mag 7 and all those type of tickers, we had other stocks like SoFi, like Vail. There was many different tickers that we took swing trades on that were lagging, that really didn't have a very, very bullish November. And financials, Finex type stocks, Affirm is one of them. They didn't really break out in the same aspect. And really, as we rolled into December, that rotation is where we kind of really jumped into those trades. So if I'm looking at a chart, and right here I'm on the Coinbase daily chart, all right. This is just what I'm looking at, all right. And let's look at where we were at the end of October. So we're going to ignore the breakout we just had. It didn't happen, guys. All right. So we're not even concerned with this right now. All right. We're just concerned with the rest of the chart. And what we would look at here, if I'm looking and we've got this consolidation sitting here, and I'm trying to really hammer out the trade of where I want to take the trade and what options I want to use. And obviously there's the simple stuff like we see a trend line right here. That stuff's obvious. If you're in this workshop, I'm willing to bet you know how to draw that trend line, and you were easily able to identify this trend line. Hit our head, hit our head, hit our head, hit our head. Sure, that is one way we can take an entry. But past that, all right, when we do break this area here, how many of us, by the time we're turning red this third day, even though we bought contracts 3-4 months out and spent way too much money, if our risk reward was going to be a 3-to-1 or a 4-to-1, and how many of us are already abandoning the trade by this area right here because we got spooked with 1 day of red and we're out of the trade and we missed the whole run up because we don't have a plan. We don't know what our expected move is or anything else. We are simply, coming in blind. All right. And that's his recipe for disaster. And that's what really makes us fail. So what is with an option contract, what's our primary purpose? We want to identify the move we expect to make and the amount of time it's expected to make that move. Those two scenarios, because options have theta that work against us. We understand that. So we really do want to understand exactly how long the trade is going to take and why. So what are we looking at here? The first thing we can notice on this chart is we've got this pattern. We're up, and then we're down, and then we're kind of sideways, and then we're up, and then we're down, and we're kind of sideways, then we're up again. And now we're in our midst of our down. Okay? So we've identified a pattern here. Cool, So what's the next step there? Well, this leg looks the same length as this leg. That's what we want to look at. What looks the same? Because all the past is a precursor of what's going to happen in the future in stock charts. What happened before will happen again. The past is literally our sneak preview at the future. All right. So we've got this area right here, and on TradingView specifically, who's one of the sponsors of this options open house right now. Thank you very much. There's the TradingView tools we've got right here. If we go and we look at, we've got our measures. We've got our price range and our date range measures. All right. So what does that tell me? It tells me we can measure our price. That's what I've got right now. All right. So I can see. Let's see what let's see what CoinU has done in the past with these strong breakouts, because we've already identified it gets these very, very strong breakouts. So we're going into the past and we're looking and we're putting this little line on and we're going, okay, from high to low, coin this time ran approximately 150%. Right there. Awesome. We ran 150%. We went from approximately $36 to $82, and then we hit our head. And we had a triple top, hit our head, hit our head, hit our head. All right. Perfect. What else do I notice here? Let's check the next one. This one looks very similar. It looks like approximately the same amount of time, doesn't it? So let's check it. All right. And would you look at that? If we go from our low to high on this one, 146%. That's pretty damn close to each other, wouldn't we say? All right, that's like 150%. And it's done it twice. And if we were to go back to look at this one, this isn't as clean as a move. But the last time we had a very, very strong push. Let's look what it did that time too before it hit its head again. So if we could pop this same exact one on and go from here to here, which was our low to high. Sorry, I drew it at the wrong one. That would have been too deep of a pullback. So here to here, approximately 165%. Very, very, very close. So the average of these three is within like 10%. So we have 155% average. That's insane. Like, holy cow, if we bought a contract on an option trade 6 months out, a year out, however long we decide to buy it, because we already know we're going to figure out how long we think it's going to take as well. So we're not buying anything just looking at the 153%. We want to see how long it's going to take. So let's look. If we were watching this back in October and we had this detail on this map here, here, and here, let's check it again just for shits and giggles. All right, what did it just do? Would you look at that? 150 to 160%. We're within 2 to 3% on all four of these breakouts. I mean, that right, so bingo, we have our bingo card here. That it played out perfectly. And each of these was strong. This one was a little choppier, but these three were straight up each time. All right. Well, how do we know which one's going to be the breakout and which one's not? How do we really decide? And here comes my next step with the fibs, because each of these seems to have a pretty deep pullback, like kind of halfway. Is it halfway? Is it at that golden fibs pullback? So let's just jump further in it. I want to know where it's at, where it's going to pull back to, and how long it's going to take to get there. Those are my three keys I always want to identify when taking a trade. So fibs is one of my tools to do this. I'm not using 98 different tools. I'm using a fibs. I'm using the move, the expected measured move, and the amount of time it's going to take to get there. And then the confirmation is our volume. We're not there yet. So let's put a fibs on there. Always low to high. If we're measuring a breakout, we're measuring from the start of the trend to the end of the trend. This is the first one here. We want to see healthy pullbacks. I'm not going to get into all the fibs levels. If you want to really get in depth with fibs, I suggest joining the Discord, because that is really some bread and butter that people are just absolutely destroying their trades with. But as we can see here, we pulled back exactly to that golden fibs type entry. All right, and it
Plus,
did it
when
once
you
here.
stream on your 2 days, you're putting these fibs up and then saying, "Hey guys, this is the fib I'm watching." So it's not like people have to, run their own fibs and da-da-da. You're giving us those levels, especially when you stream live, and it's really nice to just be able to follow your trades.
Absolutely. We're always readjusting fibs, even on day trading. If you're a day trader, a type of trader, we're constantly putting new fibs charts. We know exactly where to take the trades, the biggest thing that traders struggle with is identifying continuation versus reversal. And that is truly what KT, myself, Doge, all the members, all the admin in the Discord. That's, I think, what this Discord does better than anyone I have come across. I've been in multiple Discords. I've been trading for many years. And that, bar none, is a top three of what I would say are the strengths at Honeycomb in general is day trading traps, not getting caught in the traps. And even if we are caught in those traps, it's okay. Because the system we use with the fibs, the system I use with the fibs guarantees at least a 1 to 3 or 1 to 4 risk reward on the trade. Meaning we could lose three in a row. It doesn't happen. But even if we lose 3 of these trades in a row and hit the 4th one, we're still at a break even. That's what gets us that place where we're as close to possible as these algorithms trading. Mm-hmm. You know, we're
yeah, we've had members that were like, we're cutting it, lost the fib. You know, I don't want to be more than a 10, 15, 12% loss. You know, maybe I'll add in 18% loss because I like this level. And then members are like, I stayed in, it dipped on the fib and came back. And I'm like, listen, me and Amajam are not saying, hey, hold through this. But, you know, members have the levels. And if you know, we give out the levels, it's kind of crazy sometimes. But are you okay pausing there so that Peter and David can hop in? Here. Is that okay?
Absolutely. I can pause. We can do whatever. And we will pick this back up. And we'll finish this section. Absolutely.
Oh, man, this is good. I love the fib stuff.
Can you guys hear me now?
Yeah.
Yes.
Okay. Yeah.
Jake, we can hear you. Peter, what's up?
Hey, can you hear me?
Yes, sir.
We can. How are you? Do you want to share screen, or are you just going to speak?
I'm just going to speak. I'm not a screen. I'm not a screen sharer.
No,
but I'll just hop on and talk for a minute. I'm a jammer. I'm telling you, I've been trading for 137 years. I was absolutely, like, you knocked me out. It was really spectacular. First of all, whatever coffee you're drinking is spectacular. I appreciate the energy. I don't think I've seen energy like mine and anyone else. So I really appreciated everything you said there. Really, really spectacular. No, guys, look, so if you guys know who I am, I'm a trader on the floor of the New York Stock Exchange. As I said, I've been doing this for 100+ years. I trade equities. I don't trade options. I'm partnered with Trade 2179 here at the bottom of the screen, David Green. We started on Wall Street together in 1985. He's a market maker. If any of you have been told in the crazy world of Discord and the internet and Reddit that market makers are bad guys, David Green will completely dismiss that rumor. They don't know where your stop order people, so don't think they are. They're actually really good. I've been working with market makers for years. But anyway, I trade equities, and David Green and I have an academy where we teach people technical analysis. I have deep respect for what Amajama was talking about in the option world, and obviously we deal with Fibonacci as well, one of the great indicators. I will mimic what she said is what we do at Wall Street Global Trading Academy is not fill our screens with tons of indicators. I know people love, we don't want your screen to look like air traffic control on 9/11. That doesn't serve anybody, right? The trader's mind needs to be simplified. We are our own worst enemy. I also wanted to mimic so much of what Amajama was talking about from the psychology of trading, right? There are people who trade in fear, and then there are people who are just throwing a dart at a wall. If you get into a trade for the right reasons, and you use a stop order on every trade that you do, then you're going to know where to get out of the trade. You're going to be able to protect your downside risk. And you're not trading in the dark. You're not trading on fear. You're not trading on FOMO. You're not sitting in a trade hoping it's going to work. You know what your parameters are. You identify your downside risk. using stop orders. We use stop orders down 1% of the price of the stock, not our portfolios, not anything else. So we do things a little bit different than Amajama. Deep respect for you, my dear. Really spectacular presentation. And I gotta let you go back, but I'm gonna let David share some of what he does. I wanted to invite all of you. So David and I have an academy. It's 9 hours, 21 videos. We coach and mentor all our students for life. And it's available at wsgta.com. This Wednesday, we are going to be partnering up with Top Step. Top Step is one of the option trading platforms, sort of one of these funded trading platforms. We do webinars once a month. They're live. They're free. We talk about technical analysis. We talk about risk management and money management, and we talk about the psychology of trading, which I know Amajama really has a great tack on because you were spot on. As far as what traders go through, we've got two people, one on each shoulder, right? And there's the one that tells us to just get in there, throw a dart at a wall and hope it works. And then there's the one that trades on fear. We are firm believers in getting the most out of our winners and lose the least on our losers, right? We do have losing trades. Anybody who tells you they don't is full of shit, right? But you need to identify your downside risk. And then we are firm believers in starting to take a profit when necessary, but hold on to enough of a trade in a winning trade, trend trades particularly, which are some of our best performing trades, so that you can scale up, whether you use a bracket order, trailing stop, whatever it is, to get the most out of those winners. Anyway, we'd like to invite everybody Wednesday night, go to wsgta.com, register for the live free webinar. We invite you all to be part of it. We coach and mentor all our students. I invite you all to come reach out to me. If you're in New York City, come and visit me at the stock exchange. I'm there every day trading, and I'm going to just pass it to my man, Dave. David Green is one of the great teachers in the technical analysis space. I had a million different people that I could have partnered with. He's a master. We started on Wall Street together. He was a market maker until he retired at 38 and has spent the last 20 years teaching tens of thousands of students all over the world technical analysis. What's great about technical analysis is you can put any chart to it. You can trade options to it, futures to it, crypto to it, whatever you may be trading at the time. But anyway, I'm going to toss it to my man Dave.
Thank you, Peter. As always, I'm not sure if I know how to share charts. KC, is there something I have to hit here? I don't want to get all screwed up like Jake did, but is it an easy process to do, or is it a difficult thing to do?
Yeah, so on the bottom, the icon, it looks like a computer monitor with an arrow. That's probably the best way. If you want, I can hop off, and you guys are free to share. Yeah, and then you can click the screen or the application or...
Where did David go?
He must have clicked the wrong button.
Yeah, I just lose you guys when I hit that. That's okay. We don't have to show charts. I think what we're going to talk about today, and I'll go back to the psychology thing. I don't think anybody should be trading at all unless they have a handle on that. I encourage my traders not to even look at their P&L while they're trading.
Yeah, that's smart.
I don't think there's any reason to. If we're getting into something for a technical reason, we're not going to get out of that trade unless it's a technical reason that tells us to get out of it. You know, I had the same chart that Amagen had up in Coin, and I can't put it up there again. But not only do we make money on the long side of Coin, but we make money on the short side too. I don't know. There's a lot of people out there who are afraid to being short stocks. It is one of my favorite things in the world to be. I know we're on Spaces a lot, and we're talking about trading futures, which I think Ryan, you wanted me to talk about trading futures today.
Yeah, you guys do futures too, and I saw you tweeting about that on NQ.
Yeah, exactly. We do a lot of trading in futures, guys. If you want to talk about a low barrier to entry for trading, there are a lot of firms that do this. Top Step, Apex. You can open up an account with them with as little as, sometimes they have a 90% off sale, cost $18 to open up an account. And we have trained literally thousands of people to start trading futures because of the low barrier to entry. There's some hoops you got to jump through. You got to qualify a couple of times. But the people who are following our methods and using our technical analysis are finding great success in it. It is like trading anything else. We trade the NQ, which is the NASDAQ futures, and the ES, which is the futures for the S&P 500. It is not like trading anything different than trading a stock or an option. We do trade options. It is not my expertise, but I have some people around me who are experts in trading options. One of the things I learned a long time ago is that you know what you know, and if you don't know something, get someone smarter than you to help you with that. So we basically concentrate on stocks and futures. That's what we've been doing lately. And the whole thing with stocks and futures is, especially the futures, we will never, ever, ever get, and I'm so sorry I can't share my charts, but you guys come on Wednesday night, and I'll be able to share my charts. I will share with you the actual technical analysis that we use. We have 5 different trading setups that we use that encompasses anything a stock can possibly do: up, down, sideways, not doing anything, up too far, down too far. We do a lot of swing trading, where we'll hold something for a week, 2 weeks, as long as it takes for that trade to pan out. We did a swing trade a couple of days ago in one of the stocks we were looking at. I don't know if it was on with you, Casey, when we were talking about coal, the ETF for natural gas, where we were able to get in a stock right around $66 and sell it for 10 points the same day. I am not a big believer in talking about money. I encourage my people not to talk about money. When we're trading, we just let our P&L talk about ourselves. No one that is with me or has ever been with me, you're ever going to hear bragging about how much money they make. Because if there's one thing we know about this market, and I think everybody who's here will agree with this, is that it is humbling. Everybody here agree with that? You could be the greatest trader in the world, and one day something doesn't work out, and you're not the greatest trader in the world anymore. So we never, ever talk about how much money we make. We show I have a private trading room, very, very private, where I show every single trade that I do live in real time. We talk about entries, we talk about stop orders, we talk about profit targets. And the mistakes that traders make, just to go back to psychology a little bit, they're all the same, guys and girls. There's no, everybody who is trading that does not succeed in this, and we know how difficult this is. Whenever we do a webinar and we get 500 or 1,000 people, we tell them the truth about everything because we know how difficult this is to do. It is extremely difficult. And the hardest part about this is the psychology. There's no question about it. I could fill this room with 500 people that could pick, and I think Amogen pointed this out also. With 500 people can pick the exact spot to get into a stock based on their technical analysis, and 490 of them still go broke because they have no idea what to do once they get into the trade. And we know that is the most important thing. That's why I think not looking at your P&L, even if it's longer term stuff, is very, very important. Just play your technicals. We had a signal in coin back in November, like Amogen was telling us, where we had a huge period of consolidation, and it finally broke above that about $90. And the stock went from $90 to $170 and gave us a major sell signal at $187, where we were able to short the stock. We're still short a little bit of the stock. It's coming down to a daily level. I was telling everybody in my room this on Friday. We have some big levels coming in coin down around $128 on our daily chart. And then our weekly chart is down around $125. And if we break that, we got lots of room below that. But as far as futures is concerned, we are going to have the CEO for Top Step on with us on Wednesday night. Ooh. He will walk you through the whole process of how to get involved in this. Are we getting any comments from peeps, KT?
Yeah, they're in the chat right now.
Let me pop it up there. You'll still be able to hear me, right?
Yeah.
I'm sure there are a lot of people in the chat that would be interested in getting involved in trading who haven't gotten involved in trading with that lower barrier to entry. And we don't change anything that we do. Everything is still based on technical analysis and everything. We have people, and the reason that me and Pete do what we do, we do not make a lot of money doing this. I can tell everybody that's here with us right now, that is not our motivation for me and Pete. Like I said, I was able to retire when I was 38 years old after working on the Florida New York Stock Exchange for 20 years. We saw a need for this. And a lot of you guys, one of the best courses, hands down. Oh, thank you so much. One of the things that me and Pete were very aware of, especially in COVID, guys, right? There were a lot of people that made a crap load of money during COVID, and most of them didn't hold on to that money, right? And I heard you guys talking earlier that I'm trading for 2 years, or I'm trading for 3 years, or I'm trading for 5 years. I am doing this for 35 years. It is the only thing I ever done. I barely get out of high school. I did not go to college. I started working on the floor with Pete in 1985. But I'll tell you a funny story real quick is, as a specialist broker on the floor of the New York Stock Exchange, I used to have all the orders in my hands. I had the buyers in my left hand, and I had the sellers in my right hand. It didn't have to be a brain surgeon to make money, and that's the God's honest truth. When I left the floor of the exchange and I started trading on my own, and this is the truth, I lost $300,000 in the first 4 months I was trading. And that is because I never had to use technical analysis when I worked on the floor of the exchange. I didn't know what it was. And I was so arrogant and had such a big ego when I first left the floor of the exchange that, how could I be wrong? This is what I've done my whole life, right? Well, I was wrong, and I was wrong every single time I got into a trade. And it took me the better part of 2 years to teach myself the technical analysis, and with the help of other people. As long as I'm doing this, I am still learning, and I hope to learn every single day. I just started Spaces with Ryan and a bunch of other people a couple of weeks ago, and I'm learning things from Ryan and everybody else who is on there. So one thing you have to get rid of when you're trading is ego. I mean, that's it. That's a big part of this, right? And it took me a couple of years to get that money back, and we are still adapting and still learning. I don't care if you're trading for 3 years or 300 years, right? If you're not willing to learn new things, then you're in the wrong ballgame. And I have learned some of the best things that I have from some people who have just started getting into the trading game, right? And I can tell you this, that the less bad habits you have, okay, the better chance you have of figuring this out and being able to make a couple of bucks. And I also heard a bunch of people talking about earlier and Ryan, I think you mentioned this, and then tell me if you did or not, about sizing up.
Yeah.
And I know a lot of people who, and like you said, beginner's luck or whatever it is, they start and they're doing very, very well, and then they go from trading 1 contract to 20 contracts.
Yeah.
And they wiped out their account in 2 days, even though they might have had 3 or 4 good trades before that, right? This is a game of patience. It's a game of discipline. You have to be in this if you are, and this is another reason why so many people fail. They're not willing to put in the work, right? They're just not willing to put into work to actually figure out how to do this. And it takes a long time. And I tell people who are just joining us, you have to give yourself a minimum of 3 to 6 months to try and figure this out. Get as much education as you can. I don't think there's anything as bad education, right? Although I will say this, there are some people who are better at it than others, okay? I think teaching is an art in itself. I think we saw a little bit of that from Amagen, to be able to get across what you're trying to say to people in an easy to understand way. I think that is mega, 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 mega important. I don't want to take up a whole bunch of your guys' time. I will just say this, that come Wednesday night, okay, we are going to talk. Oh, look at this. Everyone who opens an account during this webinar, 500. Beautiful, KT. Excellent. Come Wednesday night, we will spend like 3 hours together. I will share everything that we do.
I'm going to be there because you've been having some really good insight on, you had coin. You need to tweet more. That's what you need, because I'll be watching the level, and when you post it, like we were talking about Tesla last week, and our levels were lining up. And so I really want to see on Wednesday your guys' whole presentation. I'm looking forward to it.
Yeah, we do. I have a Twitter sphere for anyone who has purchased our course or who is with us. I tweet out options trades. I tweet out swing trades. I tweet out things. Everything that we do, we tweet out. I never, ever, ever get into a trade before my people get into a trade. One of my pet peeves is that please don't come on a Spaces or any other place and tell me that you're already in a trade that's working. You know what I mean? That is, to me, that is, I just don't want to hear it. And we see it all the time, right? What good does it do anyone for you to come in and tell me that you're in a trade that's up 50 points or down 50 points, right?
Yeah.
So that is one of my pet peeves. We are all about integrity, me and Pete. We are doing this for a long time, and we're not that old. We just started when we were very, very young. So I urge everybody to pop in on Saturday night. On a Wednesday night, okay? I don't want to take up any more of your guys' time here. But I will say this to everybody who's out there who's trading, whether you're just first learning how to do this or whether you're experienced and you're struggling, we know that at least 80% of people who try to do this at the beginning cannot figure out the proper way to do it. Get with guys like KC, get with guys like Jake, get with these guys are, and me and Pete do not get involved with a lot of people. I can tell you that right now. We just don't, because we know how much shit there is out there also. And I think you guys will agree with this, right? There's a lot of garbage out there and people with bad intentions other than trying to take your money from you. That's just the way it is. And especially in the education space. But these guys that I have just known for a few weeks now, they're just spectacular. They really are. So keep learning, keep trying to get your ego and not involved in this, and just hang out with these guys, and you're just going to learn every day. And the more knowledge you have, the easier this will be for you to figure out. So I thank you, Ryan. I thank everybody here. Let's get back into the meat and potatoes, and I'm going to stay on and listen because I'm sure there's something else I can learn in the next hour or so too. But thank you for having us.
Yeah, we have a little mini Peter fan club in the chat. Everybody wants to go get his autograph and pictures with him. So, but you know what, you guys, we do these free events, and it's like, hey, if you're vibing with what Amajam is saying, hey, we're watching these levels with what David is saying and Peter's saying, and you go to their event on Wednesday and like it, hey, maybe you take the next step. Maybe it sounds good, and this is like a commitment that you want to pursue. If he's giving us levels and trades, right? You know, obviously Pete works on Wall Street, and I went to the New York Stock Exchange with him, and he wasn't like, hey, Ryan, here you go, take a picture and go. I mean, we were with him for 6-7 hours all day. He told us who laid the bricks on the building and who started the stock exchange, why it was pretty unbelievable. And not only that, but we were talking about technical analysis with charts. He was saying Microsoft is at this level. We're watching Tesla. And he's even started talking about commodities, which I don't look into, but I respected. And he was telling me what their stop losses are. And from an options mind, I was really fascinated. And I'm looking forward to going Wednesday and kind of learning about what they do. So thanks for being here, Pete. I know that you get pulled in many directions, so appreciate it, guys.
Can you hear me?
Yeah, I can see you too. I can see you.
Oh, I love the fan club. I love everybody. You know, the social media platform that I've created has given me the opportunity to get in the educational space and to really show, look, I love what I do. For me and David Green, it's the Super Bowl every day. Trading, you guys are young in the business, but I've been doing this for a long time, and it just gets better every day. As David said, I always reevaluate. I'm always looking to learn from young people. And in my opinion, you guys are all the next, and I'm not that old really, but you guys are the next generation of traders in this space, right? You're going to be investing in the market. You're going to be trading the market. And so you guys are the future in this business. So it's really my responsibility as someone who's been around for a while, and I'm sorry, some of the people I came up in the business with don't feel that strongly about it. You know, the meme thing came around and Robin Hood and all this stuff. And some of those old crusty old timers were sort of like, oh, we don't want, these guys are cowboys and Indians. We don't want them playing in our VIP club. And I'm going like, guys, you're so full of shit. This is the next generation of the trading and investment community. It's our responsibility to teach them, to curate them, to educate them, to motivate them to learn the right way. The problem that happened during COVID, when everybody showed up with the ability, when all the democratization of the trading community came along, and everybody with an iPhone and $100 could suddenly trade, was that nobody gave the educational part of that puzzle to everybody. It's not like if I want to fly a plane, I'm not going to just grab the keys and hope that it works out, right? Trading involves money. Trading involves your livelihood, and to not be able to have educated yourself of technical analysis, of risk management, of the real do's and don'ts in this business, of the psychology of trading, is a mistake. And it's a mistake that a lot of older people in the business have made, that we weren't here to educate you. That's why I took it upon myself to partner with David Green, to curate Wall Street Global Trading Academy, to do webinars that are live and free, now to bring in the futures part of this puzzle, because not everybody has $25,000 to trade. Right? Not everybody has the money to go in there and do that way. So all the barriers to entry are now down. Top Step is an extraordinary platform. You're trading virtually. You're getting into the business. You're learning the game. You're learning technicals. And then you can go on and actually build this to become a trader, to use it for your next job interview, to get into the investments that you want for your future. So anyway, I wish everybody comes join us. You got to register for the webinar, wsgta.com. Go to my link on my Instagram. Register if you want to learn more about technical analysis in the course. We coach and mentor all our students. Go to Wall Street Global Trading Academy. But first, come and join us Wednesday. You'll get a sense of what we do, and you're all welcome. If you come to New York, DM me. I will come outside and we'll hang out and chat and take a picture, and whatever you need, I'm there for you.
Yeah, thank you guys again. And I'll show just one more thing I want to add. I'm going to show you guys on Wednesday night how we were, and again, I'm not doing this for any other reason than to talk about our technicals a little bit. We were able to get into NVIDIA at $108 in last November, and there's a bunch of stuff that might be setting up for swing trades now. So hopefully some of these things will set up in the next couple of days. I'm looking at Coin to get in on a long side soon, and Tesla. Me and Ryan are talking about Tesla like every single day, but 210, Ryan, 210 and then 201.
All right. We were saying
guys for having
210, so we'll see what's next on it. Cool.
Yeah, we'll see.
Thanks
for
so much.
having us.
It's good to have you guys. I also wanted to say that for a lot of people, they get into options first, or maybe never even touch futures. But futures is something you should take a look at, especially when you have a larger account size, even though the requirement for margin is really small. Futures, like understanding where they came from and all that, can take some time to learn. But when you actually look at how futures trade, it's like one tick up, you make $12.50. One tick down, you lose $12.50. So it can have an advantage over options when you're trading, especially when you're day trading, because options, the Greeks can often mess with you and mess with your trade. And sometimes you can end up with, you buy a put option, and for whatever reason, the stock price goes down in your intraday, and your put option has lost money because of other Greeks. While with futures, it's just almost like trading stock. It's just leveraged. So I'm just going to post something in the comments that will, basically, it's TD Ameritrade's How to Trade Futures and their education on that.
Thank you so much.
It's really helpful in figuring out what futures are. You do have to be careful, though, because the margin requirements are so low that you can have positive expected value, but the variance of your trades can still wipe you out. So it's better for larger account sizes. And I'm also going to post in the comments where you can find futures contract specs. Because each type of contract, like /ES or /NQ, will have different specifications if you're trading the minis or not.
If you DM me, I'll put it on the Padlet. Then it's like in the hub. So send me the links.
Okay.
I'll put it in the main link hub. Thank you so much.
Yeah. Also, just so you know, Ryan, we're going to have the CEO of Top Step on Wednesday night. So he will walk everybody there. He will walk everybody who's there through the requirements, what it takes. I can tell you that last week in 1 week, we had over 100 people qualify their accounts, take the first step, and about 30 of them have already funded their accounts and are able to start taking money out. So it's something that can be done.
Wow, I'll be there 2 p.m. Pacific, so it'll still be early my time, but I will be there Wednesday, so looking forward to that.
8 p.m. All right, thank you guys. It was a pleasure. We really appreciate the opportunity.
5 p.m. Eastern. What time is it on Wednesday?
8 p.m. Eastern.
Oh, okay. So it's 5 p.m. my time. Okay.
Correct, Amanda.
Perfect.
Thank you, guys.
Thank you so much.
Love you, Pete.
Jake, do you want to try one more time? I know you're having some tech difficulties.
Yeah.
Okay. Sorry, we have a big hodgepodge of speakers trying to get in. Hopefully Jake's tech issues are good on Discord. Oh, let me stop sharing my screen. It's not going to let anyone share if I'm doing that. There we go. I'm getting DMs, people signing up for the webinar Wednesday, signing up for Jake's Twitter Premium and Aries. So everybody's getting hooked up for the week on all the benefits. That's really cool. Moment of truth for Jake here.
Yeah, so even if you don't trade options, those webinars from Peter and David are great for just paying attention to your long-term accounts. Because like he mentioned that buying NVIDIA at like 10 something. I've been in NVIDIA for several years, but I remember mentioning that to somebody who wanted some stock advice, like I want to say last year, and I was like, "Hey, Nvidia is the best buy I can see on the market right now at 100 something." So
I'm gonna give you guys the coin setup too. When we pop back
Ooh.
on, you can get a little trade from me to watch
yeah, I'm
this
excited to
week.
see that. I'm excited for that.
For Nvidia too, equities, NVDL is for long. It's cheaper. NVD short. If you don't want to do options, if you think Nvidia is going down, you can buy NVDS for the downside, and then for the dividend exposure is NVDY. It's just like TSLY. You get Tesla exposure for dividends because Tesla doesn't pay dividends, and then Nvidia it's NVDY. So it's NVDL for long, NVDS for short, NVDY. Those are all equities only. The liquidity on options isn't there. So someone is messing with Jake's Wi-Fi or something. I saw it flicker on and off. He might have to record it and we'll play it or something.
Can you hear me?
We can hear you. Your screen went up
Yeah.
and down for like half a second. So
There we go. It says, warning, app doesn't have permission to record your screen.
do you have a
Make
MacBook?
it yeah.
You have to go into settings and I forget exactly what you do.
Yeah, sorry, I never use Discord, so I'm probably like all on default settings and all that.
No, you're fine. Let me. I honestly have to go to YouTube. I don't remember, but it's like Discord screen share.
Yeah, but I've never really had problems
Yeah, permission. There we go.
on Discord before. Permission record screen. Okay, what do you do?
Let me send you this. Yeah, this is exactly what it's showing me. It says go to settings and then privacy security.
Okay.
Scroll down to screen recording, and then you have to allow Discord.
Privacy and safety.
Privacy, yeah, it might be that. And then I'll just hack into your bank account as soon as you toggle that, and we're good. Privacy security. Yeah, I'm checking mine right now just since I'm looking at it. Screen recording.
Safety.
Yeah, then you have to like toggle Discord. Let me send you a photo, a little screenshot of it. There we go. Sent you that.
It's in the Mac settings, not the Discord settings, Jay.
Yeah.
It's in your actual computer settings.
Oh, that's, yeah, that would make sense. Okay.
Amy's so smart.
I'm the one that had an issue for 3 months, so.
Oh, that's right.
Yeah. Well, I never had an issue in my old, where I used to live trade, and then when I came here, it was just, I didn't know what the issue was, so.
I don't know
It's
what
been
it
good
is.
for a while, though.
Screen recording. Sorry, I was looking on the wrong thing.
Nope. He left.
Hey, Lindsay, do you want to touch on some trading psychology while Jake figures this out?
I mean, not really.
I had to ask it anyway. I knew the answer. Every speaker has talked about trading psychology so far. That's your field.
Oh, I don't know about that. I'm still working on that one myself.
Oh,
No,
there you go.
I love
It's
your
working now, Jake.
Sundays with Beef. I texted you. I was like, I'm looking forward to it every Sunday, and I send it out to the Discord because it's a different struggle every week. Whether it's options, whether it's futures,
I
equities.
struggle with a lot of things.
No,
It's
but that's
working
good
now.
that you're putting it out there. We see
Hi,
Jake's
Lindsay.
screen. Wow.
Hi. I'll come back when Jake is done.
Okay.
Can you see my screen now?
Yeah.
Oh, wow. Okay.
Yes, sir.
Very long. Awesome. All right. Sorry about that. I never used Discord, and I guess the app had a few things I needed to update. But everyone can hear me, and they can see the screen, right?
Yes, sir.
All right. Sweet. Well, so I'm gonna kind of put a little bit of a twist on things. I'm gonna focus on, as I mentioned, focusing on what target you should really be paying attention to. And this is something that I actually saw as a big problem in my subscription at first, because when I give a trade idea out, or even if I'm just doing basic analysis on a stock that I just do daily analysis on, I usually do analysis on pretty much all the large cap, most liquid names, and then some individual names as well that are a little maybe less known, but. When I come out with an idea or I come out with an upside target, generally, that upside target is a function of the stock price. It's not, an upside target on what the options are. So kind of to start off, when I'm providing information and analysis in my subscription, I kind of take more of an approach where, I want to be the fishing guide. I don't necessarily want to be telling people, hey, cast your line right here, or that type of thing. I want to kind of teach people how to fish, and then based on what their risk tolerance is, what their trading style is, then from there they go in and they choose which vehicle they want to use. Maybe somebody thinks a stock's going to go up in 2 days, so they buy the end of week expiration on something that's 2% out of the money. Someone else may buy spreads or put on a spread. So there's a million different ways to trade and to take advantage of setups in the market. It's just what works for you. So, the main thing that I wanted to focus on is when I come out with some type of target, and a lot of the time, my targets are very simple. They're either gaps, they're either anchored VWAPs, or they're either supply zones shown by the volume profile. So if you're on TradingView or you're looking to get a TradingView account, all I'm using is the anchored VWAP. So the anchored VWAP is essentially just on the measurement, forecasting and measurement tools. So anchored VWAP right here. Fixed range volume profile is another one that I use. Anchored volume profile. And so pretty much the fixed range volume profile is pretty much the same thing as the anchored volume profile, but it's a lot messier. So essentially what an anchor point is you're just starting from a specific point. So a lot of people use VWAP, but it's like a continuous VWAP, like a 14 period look back VWAP is just looking back, 14 periods, whatever candle you're on. The anchored VWAP starts at a specific point. Generally, these are points where you have a reset in the market, meaning you have a capitulation or you have a reversal on the upside, and then you move down. So the anchor point is really where, quote unquote, the status quo changes in the market, i.e. the trend reverses, i.e. You have a gap up from earnings, things like that. Something that really changes the overall status of the trend you're in or just the stock price. So I try to keep it extremely simple. The anchored VWAP is essentially the dollar cost average of all shares traded since a specific point in time. So I'll go over an example here on Apple. This was an idea that I shared last Friday, not 2-3 days ago, but the Friday before, and it was very simple. And what I really look for is just confluence of multiple things, right? So confluence means you just have multiple things all kind of aligning. So I do like to use very basic horizontal levels. An SR flip, if you can see on the screen, is essentially when a previous support zone becomes resistance or a previous resistance zone becomes support. And so, one, that's something I definitely look for. That's just simply looking at price action. The second thing that I look for, and this is something that you really have to, this is something that people can really mess up. You really have to use lower indicators only in really extreme overextensions in the market, because if you're not, you can really just misuse the indicator and get yourself in a lot of trouble. So what I like to do is I like to use the Williams percent range. It's essentially a highly sensitive RSI. I use the 10 period on the daily chart because I want to look back essentially 2 weeks. So there's 5 trading days in a week. That's where you get the 10 period from, or in this case, it'd be the 10-day look back. And then I like to use the RSI, same thing. It's also the 10 period that I use on the daily chart. So, what I look for is I essentially look for, especially on something like Apple, where Apple really does not become extremely oversold that often. And even Tesla, like if you look at Tesla right now, it's extremely oversold on the RSI, and generally you get a pretty strong bounce. Now, that's only one aspect of it. I do like to use the MACD as well, and this is actually why that's why I like Apple going into this week, but that wasn't the reason why I liked it last week. Generally, the MACD is a lagging indicator. So when you have the MACD curling to the upside or the downside, the move has generally already started. That's because the MACD is essentially a function of price action. So if price action is moving up, the MACD starts curling because that's just how it works. And it's taking in that new information, and the MACD line is starting to curl up because it's the faster of the two lines. The signal line is definitely a more lagging indicator than the MACD. So the MACD is the indicator, but the blue line is the actual MACD line, and then the yellow line is actually the signal line. So, in this particular case, I was simply, the MACD is great for, maybe a longer term reversal, but I don't always need the MACD to have, a pretty high probability setup. What I had here was, and this was kind of where the idea came from. One, Apple is down almost 10% in about 3 weeks, which is generally pretty rare for Apple to have that big of a move down without any type of bounce. It pretty much just melted down. So one, you had pretty much the RSI in the Williams percent range and oversold territory. Now, what you really want to, and this is where you can get yourself into some trouble with, if you were just using the RSI and Williams percent range without using divergence on the Williams percent range. So the signal really comes is when you're using the Williams percent range and finding divergence, right? So if we're just moving down on the Williams percent range and the RSI is also oversold, you're getting close to likely a reversal, but you really need to have divergence. That means that you have a lower close on the daily candle or whatever candle you're using. I prefer to use lower indicators with the daily, the weekly, and the monthly. You just get a better, you get less noise. So what you want to look for is, we did have these conditions met, right? You had the Williams percent range oversold, you had the RSI oversold. However, notice here on this candle from Friday, and this is, you can't even tell this is divergence. So this is what I like to call like mathematical divergence, because you can't really see it with the naked eye. You can't really see that this is actually a very slight upward slope on the Williams percent range. So you just have to double click the pane, and you'll see if you zoom in, this was like extremely small divergence. And a lot of the time it can be like that. It can be that extreme where you have to zoom in that much to actually see if it's divergence. And so that's your signal. Once you finally start getting divergence on the Williams percent range and the RSI is also oversold, that's when you have your signal. Same thing happened in October. You can see here the RSI became oversold on the 26th. That is exactly when the Williams percent range hit a higher low on the daily chart. So really divergence is either you have a lower low on price and a higher low on the oscillator, or if it's negative divergence or bearish divergence, you have a higher high on price and a lower high on the oscillator. So this can be used on both sides. This isn't just like a long signal. You can have the same exact setup for a short signal as well. And so that's the nice thing about using these tools. Same thing though, you get a better you get a better signal if you're at an important price level. So you really using everything together. Williams percent range was oversold and printed divergence on Friday. RSI was oversold, and then you were at this previous resistance zone that flipped to support. Now, on top of that, you also had price moving down 3 weeks in a row right to this diagonal trend zone. So diagonal trend zones are a little harder to manage risk because they essentially are changing over time. So the slope of the line changes, right? So for example, let's say next week, and I'll just kind of use my arrow here. Let's say going into next week, if we close below the bottom of this trend zone, which is right around 180, then that would prove that we're breaking down. Now, let's say that pretty much price did something like this, where, you know, we go up, maybe fill the gap above, pull back, and then do a little bit of this, and then break down. Then all of a sudden, your breakdown is not 180. It is now, let's say this. And closed below the bottom of this SR flip zone, and it was at 179.70. So you can definitely use different time frames and find confluence, right? So you, on the daily chart, you had price at a horizontal level. On the weekly chart, you had price at this diagonal longer term level. And so you had all of these different conditions kind of aligning to give you a higher probability setup. And to top it off, you also had the Williams percent range and the RSI in their positions as well. So this is where it gets interesting, right? This is where the options come in. If you were trading this and you bought, let's say you even bought like next week's expiration. I am not a short-term options trader. I'm generally buying at least a month plus out. If I'm on the daily candle, you know, if I'm on the daily candle and I think something's going to move in, you know, a week, then I'm still probably going to buy 6 weeks out because you can just get flushed so easily. And I'd never buy weeklies. I only buy the monthlies. There's more liquidity there. There's more volume. And so it's easier to kind of sometimes get filled on that side too, because you don't have such a huge spread on something that's less liquid that's on a weekly chain. So if we were to look at like this is something that I would point out here in a second, but last week's trade idea, which already hit its target, right? The price was at this SR flip zone. The upside target was the October 26th pivot VWAP zone. So I like to use VWAP zones because a lot of time you'll have these fake outs, right? So if we take off this offset, you can see that price broke down and it technically closed right at the VWAP the next day, but you can see price did not respect the VWAP here. You also had price breaking down, but then closing above it here. So I want to capture that price action below the VWAP because it gives you some margin of error. So, you know, you can say, okay, well, I know that price broke below the VWAP before, and in general, it broke about 0.75% below. So when you double click on the anchored VWAP, as I mentioned, you just go to the forecasting and measurements tools, you go to anchored VWAP, you click on it, and then you just click on whatever candle that you want to start the VWAP from. So if you want to actually add an offset, you double click the VWAP, and then you go to, it says bands calculation mode. You go from standard deviation, which I think is the default, to percent. So standard deviation is going to kind of change as time moves on. The percent is just a simple percent offset. It doesn't change. So here, if I add 0.75% lower band, now I'm essentially adding another VWAP 0.75% below the actual VWAP. So I can capture that price action that essentially broke down below the VWAP, but it did not invalidate, you know, price action. So here I added the same thing. And notice here, what's really interesting is once the trade idea was shared on Friday, I think it was like midday, that you had a very simple invalidation below 179.70. And so if you were in next week's contracts or even a month out, you really want to take advantage of this impulse candle here. An impulse candle means you just essentially just have a huge bar that pretty much closes near the high of the candle time frame. And if you would have done that, you would have had a lot better chance of making, the most money you could, because what happened the next 2 days? You chopped around, and everyone knows the more you chop around, it's going to hit options premiums. And when you have a strong move up like this, where you pretty much start the day off and just keep going up and close near the high of the day, then you essentially are implied volatility is increasing in those contracts, and you want to take advantage of that implied volatility, because then if you chop around and have an inside bar the next day, especially if you're holding really short-term contracts, the premiums are just going to get destroyed from that. So yes, the target was the top of the October 26th pivot, which was right around 187. And yes, we did hit that, but you probably would have had, depending on what contracts you had, you probably would have had the same profit at 185.50 as you did 3 days later at 187, because one, especially if you're in short-term contracts, you're working against theta. Depending on how far out of the money you are, you're also working on just some of the other Greeks that are really working against you in the short term. Then the common stock price was different, 185.50. You probably could have sold those contracts the first day at the same price, even though it's a higher common stock price, because it took 3 days to kind of chop around. You probably you could have just taken advantage of the implied volatility here the first day. So the point is don't always focus on the actual upside target. If you have a strong move up like this, and especially if you're in short-term contracts, if you're up 50, 100%, then there's no reason not to at least scale some out. A lot of people think that you just have to take a full position and enter in a full position and exit in a full position. Scaling out really allows you to take advantage and say, okay, I have profit, but if I'm wrong and it's going to keep going up, then I still have half of my position or a third of my position. And you don't have to sell everything at once. You can always sell pretty much what your total capital was initially, and if you leave 5 contracts on the table, and you're pretty much just playing with profit. And I can't really tell you how to exactly do that, because everybody's got a different risk tolerance, trading style. So one of the main things is really focusing on definitely the personality of the stock, which was mentioned earlier, but also focusing on your personality. If you're someone that is extremely anxious and you can't deal with a 10% drawdown or 20% drawdown, then maybe you should be trading options. Maybe you should just be trading common stock. But I'll definitely say, if you can master options, trading common stock becomes extremely easy. It's a lot easier to manage your risk, because you don't have to work against these Greeks that are constantly changing the premium. It's a lot more cut and dry to just trade common. But there are times where options definitely make sense, and you have higher probability setups like we had on Friday. Now, we also kind of have a pretty high probability setup going into the week ahead, but you need to have a trigger. You need to have something that says, okay, this is when the bull thesis is activated, essentially. So for me, this is the thesis I have, right? One, we just are moving out of oversold territory on the RSI Williams percent range. You have the MACD starting to curl to the upside. That's showing that we could be potentially kind of ending this short-term downtrend. But then on top of that, I also use the anchored volume profile. So the anchored volume profile is essentially the same thing as the VWAP, except we're not measuring the VWAP from a specific point in time. We're measuring where volume has aggregated since a reversal point. So in this case, this is the October 26th pivot VWAP, pivot volume profile. So we're essentially just saying, since October 26th, at what price has volume occurred at different levels? So instead of looking at price as a function of time, which is generally just when you have volume on the x-axis, you are using volume on the y-axis, and you're looking at, okay, how much volume has occurred since the 26th of October at, in this case, 184, right? So each one of these volume nodes is just showing you how much volume occurred at this price. So, for example, if we were to take this particular node right here, where my this little orange line is.
I love that you post these updates every day because everything you're saying right here is very
just go
technical.
right here, pretty much put it right at the bottom, and then put this one right here. And so now if I just double click on these horizontal lines, and I go to coordinates, I know the bottom of this volume node is essentially 192.85, give or take 5 or 10 cents. And I know the top of this node is right around 193.50. So I know that there's quite a bit of volume that has occurred since this, since October 26th, from right around 192.50 all the way up to around 193.50. What did we say that was? 192.85. So let's just call it 192.75. So we know that there's a lot of people, or there's a lot of shares that have been purchased and or sold. People will ask, well, is this buying volume or buying or selling volume? Because for every buyer, you have to have a seller. For every seller, you have to have a buyer. So this is just the aggregate amount of shares that have been traded at these different price levels. And what you have is, you have something called, I like to call them essentially volume shelves. And a volume shelf is essentially an aggregation of a few different volume nodes that show you that there's a lot of volume supporting price at that particular area. So in this case, you can see going into next week, the price is holding right at one of these volume nodes, these volume shelves, and you have something called a volume gap above. That's essentially meaning that there's not a lot of liquidity above. There haven't been, relatively speaking, a lot of shares traded pretty much from where we're at, like right around 186, all the way up to around 188.75 and going up to right around 189.50. So what happens is you can have price move very quickly through these areas. If you think about, if we were to do an analogy, you think about like football. And somebody kind of breaks through the main line and there's really nobody in front of them, they can pick up speed because there's no one there to stop them. This is the same thing, right? Think about these volume shelves or these volume nodes in general as friction in the market, right? So as we move up through this volume gap, it can act as essentially a vacuum for price. And then let's say that, back in late November, you purchased Apple around where these volume nodes are. Let's say 188.90 all the way up to around 190 or so. So if you're still holding those shares, you pretty much went from being up a decent amount, right? So let's say that you bought those shares right around here. Initially, you're up 5%, price drops down. Now, all of a sudden, you essentially have this area where you and a lot of other market participants are holding shares. So as the price goes back up, you're now back to break even. So you were up 5%. Then from when you entered here, you're then down 5%. So when you get back up to where you bought it, let's say you bought it right around 189.50, a lot of the time people are either going to take some shares off the table. They're either going to maybe scale out, maybe reduce their position size, or they'll fully exit the position. And that's what creates this friction and this supply, because as price gets back up to that break-even zone, in this case, this is your point of control, right around 189.50 all the way up to around 190.25. This is where a majority of shares have traded, or the most amount of shares have traded within this price level. That becomes the supply zone. So anytime price is above one of these volume shelves, I like to call this break-even demand, because this is where a lot of people are holding shares. And so if price goes back down to that area, they're pretty much back to break even where they initially bought.
I can't tell you how excited I am to pay you $10 a month to interpret everything you're talking about and give us guidance.
I appreciate it. And I have a ton of videos on YouTube that kind of focus on this stuff too.
It's really good.
Yeah,
really good.
I try to keep it. I appreciate it. I try to keep it really simple because if I don't, then I'll just confuse myself. So I try to speak in layman's terms and give analogies and things like that. So it's easier to understand. But the best thing I can think of as an analogy with sports is like, just think of the runner running through a pocket where there's nobody there, and they can speed up. they can run faster because there's no one really that could potentially block them. And then let's say you get to 20 yards ahead and you get a couple defenders. That's your essentially break-even supply. So anytime price is below one of these volume shelves, you call it break-even supply, because people who are at a drawdown are now essentially back to break-even, so it can act as supply. And then once price is above these volume shelves and you have a volume gap, that's where you can really get these strong moves. So when you have price like it is now, you can definitely see easily an impulse candle right up to the next area of liquidity. Markets like to gravitate towards areas of liquidity and move through areas where there's not a lot of liquidity. And Bitcoin's a great example of this. Bitcoin really respects these levels really well when you have volume gaps and that type of thing. So I just wanted to explain what this stuff is, because a lot of people aren't really sure what these volume bars are, but they're essentially just showing you where volume has occurred since a specific point in time. So, going into next week, very simple. If we break below the bottom of this volume shelf, and thing is, I like to keep things systematic, right? If then, if this happens, then that. If that happens, then this. If price breaks back below the volume shelf right around 184, then this thesis is pretty much invalidated. However, the upside target, and as I mentioned, could be very quick. You could have this on a one-day move up, where you have a one-day daily candle just gravitating right towards this pocket of liquidity above. Maybe that suggests that you want to use some shorter-term options, because you have a higher probability of price moving very quickly within a short amount of time. So the thesis right now is MACD's curling, RSI and Williams percent range are essentially kind of on the uptick. You have a gap above, so that would be like the technical target, but you also have to consider, all right, we have a lot of supply pretty much from around 189 right to around 190, and that price gap doesn't really fill until around, what did we say it is, 191.73. So my point is, if you are in a trade and we get up to this volume node, this break-even supply, maybe that's when you take some profit. Instead of saying, oh, well, the price gap is the main target above. Well, we know that we're going to probably hit some pretty heavy supply. So if we consolidate at this supply zone for 3 days, you're probably going to get eaten into your contracts. And so really selling those impulse moves is important. Last part of the confluence in the trade idea is you have a pretty solid candle here, a nice weekly candle. You have price respecting this trend zone. And then that's essentially, the final piece of the puzzle here is the weekly candles also showing a pretty solid candle at a support zone. So, hopefully this was helpful. I wanted to kind of do a real life example and, give you guys something to look at into next week. The trigger here for this would, if you wanted a trigger, you would really want to break above the top of this October 26th pivot VWAP, because if you don't, there's really no trigger, right? So the VWAP right now, and by the way, if you're using TradingView and you're trying to figure out what the VWAP price is, it says it right here. So the 186.91 is blue because I have a blue VWAP. But yeah, anytime you're looking at my charts and I have a VWAP on there, the actual VWAP price is just going to be right on the x-axis as the color of the VWAP. So in this case, the VWAP is 186.91. Remember, the VWAP is a fluid indicator, meaning it's changing as price changes, price and volume evolve. That's going to change the price of the VWAP. But for right now, that VWAP price is 186.91. So if you wanted to use like the 65-minute chart, break and close above the VWAP, you could use that as your trigger. The reason I use 65-minute charts versus 1 hour is because there's 390 minutes in a trading day. If you divide that by 60 minutes, you essentially get 6.5 candles. So one of the candles on your hourly chart is actually just a half a candle. So if you use 65 minutes, you get 6 even candles. And I learned that from Brian Shannon. I pretty much am a student of Brian for a number of reasons, but definitely the VWAP and the 65-minute are something I learned pretty much solely from him. So I know I probably went a little over my time, but I definitely wanted to be clear on how some of these work, and I appreciate everybody tuning in.
Thank you so much. And it kind of looks like Apple's in a bear flag on this volume shelf that you have there. So, you know, the trade either is validated or invalidated, just like you said. So, at the end of the day, people have to make it their own trade, and we really appreciate you walking us through that. Okay. Lindsay's still here. What's up? Can people hear me? I don't even know. Can you hear me? Okay. All right, well, we'll see if Lindsay's still here. Let me message her. Jake, awesome freaking stuff. You guys better be following Jake, man. $10 a month. Shoot. It's insanity. Just, I need a snack. I need a Diet Coke. This has been a lot of information. Okay, let's see. All right, Lindsay, your mic is muted, so I don't know if somebody's trying to speak right now. Oh, I can't hear people? Okay, let me get off and back on.
holding. So really just having your own base setup that you have a go-to, you continue to play it, you feel comfortable with it, and just continue to do that every single day. Options are extremely emotional, and I talk about it all the time, like I talk about in my Sunday Thoughts with Eve, is like that's what I struggle with, because it does bring on a lot of emotion, and there's a lot of up and down, and what it comes down to is you just have to do what's best for you and what you're comfortable with. That comes with what size you're comfortable playing with and what type of option you're comfortable playing with. For me, I work full time, I'm super busy, I have the kids at home, so some people are all about swing trading. For me, it's really hard to swing trade because I hate seeing the fluctuations, and even though my levels like eventually hit, I don't like seeing the fluctuation of it going up and down. So for me, I'm much more of a day trader. Like that works better for me. I prefer to scalp, get in and out of the trade, and that I don't have to be distracted with it. Swing trading is very emotional for me. And I'm sure, some people, they've mastered it. They can kind of just get in their contract and let their levels play out. And I think that's awesome. Hopefully I can get there at some point. But I think it's really hard to do. And so for me, I prefer to just day trade. And I think it's important to not be influenced by the way that someone else trades, because it might not work for you. And I think that's a big part of social media is we are very influenced on the way that other people trade, or at least the way that they portray that they do. People love to flaunt their wins, but no one really talks about their losses. And I guarantee you, especially in options, there's a lot of losses that are taken. So I just think it's really important to trade the way that works for you. Let's see what else with psychology of trading, not over trading. I think that's a really important aspect of it. If you have a certain goal that you hit, and sometimes you feel like you're on a roll and you want to keep going and you want to keep trading, I think a lot of times we give our money back, and having the ability to step away from the screen is one of the hardest parts of trading, but I think it's one of the most important, because trading can take over you. And say you're up $500 on your day, and you say, hey, that's awesome, I'm good, but here's another trade and I want to take it. Now you just gave 100 back, and now you want to try and get that 100 back, and so you enter another trade, but maybe you lose another 100. Now you're pissed at yourself because you had these gains and you could have walked away and you gave it back. So it's really important about having self-control, being able to regulate yourself in your trades, know when to walk away, even if it's, hey, I lost $100 on the day and I'm going to leave before I lose any more. Being able to walk away from your screen is extremely important. It's really hard to do, but it's a skill that I think a lot of people need to learn and need to be able to do. And most importantly, the psychology of the actual trading is having a plan. Have a plan when you enter a trade, where you're going to exit your trade. If I entered here, if my next level hits, I'm going to scale 50%. Maybe if my next level hits, I'm going to take all my profits there. If this breaks back below, the support zone, I'm going to cut my trade. And that will remove some of the emotion of the, what if, and maybe I'm going to hold, and it's that hold and hope. It's the worst feeling ever. So you really have to go in with a specific plan of, I'm entering here. This is why. If it reaches this point, then I'm out of my trade. If it reaches this point, I need to cut. And that's going to, really remove a lot of emotion. People say trade like a robot. I suck at it. I'm working on it every day. I'm a very emotional person. But I think it's so important to have a plan with every single trade. Know why you're getting in your trade, and know why you need to get out of your trade. And that comes with time. That comes with experience. That comes with having the ability to read technical analysis, put it into play, and just follow through with it. I don't know if anyone has any questions. Sorry, I'm running out of time, so I kind of got to go, but if anyone wants to ask anything, I can answer it quickly.
I have a question. What is the biggest thing you noticed for traders trying to figure out if they should day trade or swing trade? What would you say is the biggest thing that told you I prefer day trading, even if I'm working and I can't take a trade today, I'll wait till tomorrow, whatever it might be, versus trying to kind of force swing trades? What did you notice in yourself that made you not really like swinging versus day trading, or vice versa?
For me, it's just my lifestyle. Like I work full time. I'm often home alone with my kids. I have to like get them up and get them ready for school. I work until like 1:30, 2 o'clock in the morning. I live in California, so the market opens at 6:30. And I was trying to prioritize my sleep, knowing that, I'm not going to sleep through the market open if I know I have these open positions. Um, so for me, it was just I don't like having to look at my phone all the time, having to check the stock, having to check my options contract. I like to just like get in at a level when I'm watching it, when I can give it full focus, and not have it constantly be in the back of my mind distracting me like while I'm at work or while I'm with my kids. I just didn't want to have it in the back of my mind. It's simply a lifestyle thing, I think.
Awesome. I think a lot of people, that's what they struggle with, is finding what type of trading they're most comfortable doing. So that's great to know.
For sure. And it's like certain people, it's like I look up to this person, this is how they trade, like I should trade like them because it works for them, but we're all so different. Some people, we all use different indicators, we use different styles. Some people are going to trade for 5 minutes, some people are going to trade for 5 weeks, and that's what works for them. And I just think it's okay for people to understand that we're all going to trade differently, and there's so many different ways to trade, and we can all be successful with it. You just have to really perfect the way that works for you.
I agree.
All right, I'm gonna get my kids to the mark then.
That was awesome. Thank you. I agree with all of that. A lot of stuff I've had to remind myself the hard way. So a good condensed version of all that stuff. And I saw someone wrote in the comments, my biggest losses always come after my biggest win. Something I learned from my mentor, Jake Ricci. He takes a day off after his biggest days. So something I've started to do is if I have a really big day, I take the whole day, the next day off. Because you're going to come in cocky and be like, I'm awesome. And then we all know what happens. When
we do that. You're either on or you're off, right? Like I get that way where I'm like, I'm a fucking champion. I'm so on it. My levels hit, and then it's like phases where I just can't get anything right. So
for sure.
Exactly. When I start feeling that, I know what you mean. When I start feeling like that, I kind of literally will tell myself like, hey, like cool it, like get your emotions in check. Like remember, you're not the shit. Like you're fine, but control yourself. Because I always wreck myself if I get too ahead of it.
Yeah, and I highly recommend for anyone doing this as well, try journaling your trades, why you entered, if it went well, if it went wrong, how it could have gone better, and just kind of evaluate yourself that way. I've been meaning to do it more so, and I think it is super helpful to just like have that way to look back and evaluate yourself and the way that you trade.
Yes, 100%. My trading journal is overly detailed, but that's by design.
Hopefully mine will be one day, because right now it's pretty quick.
Well, awesome.
All right, cheers. Have a good day.
Yeah, thank you. I know you have to run. I think Redo's coming up next, and then Amma Jamma, you'll ring us in.
Yep.
I would believe sorry if I'm mispronouncing that. Reda, if you're ready to go ahead and hop to it.
Hey, can you guys hear me?
Yeah, I got you.
Hey, what's up?
Yes.
How's it going?
Okay, it's going good. Let me just see if I can go ahead and share my screen. Can you see my screen?
It's loading right now. It's not working, but it's kind of what was happening to Jake earlier. It's just loading, but not there yet.
See it.
Oh,
You can see it?
No, it might be. Are you trying the browser?
Okay, yeah. People in the comments are saying they can see it, so maybe my computer's just being dumb.
Nice. Okay. So for those of you who don't know, first of all, I kind of want to just say that I appreciate you guys putting this on. Thank you to Katie. Thank you to all the speakers. While Peter was talking, I've spent some time out on New York Stock Exchange. I think there's a video out there with me and Peter and John Nigerian.
Sorry, the screen's not loading, I guess. Didn't mean to cut you off, sorry.
No, it's okay.
Did you go to
like
the security, privacy, whatever that Jake had to do?
I already did that.
Okay. Are you on the Discord app or the browser?
I'm on the browser.
Okay. It's going to have to be the app. I don't know why. I'm really sorry.
Oh, it's okay. Give me 1 second.
Cool. Sorry about that.
Oh, that's all right.
Discord loves to mess with us.
Yeah, what is up with this?
While he's going over that, I did see a question that we can answer in the comments. I know Lindsay had to jet out, but I think it's a really good one. It said, I struggle with over trading. It's why I set criteria. That's what I said. And then the question was, how do you manage your revenge or anger trading while in a losing trade? And I think for me personally, and interrupt if you're ready to go, Rita, is just to have clear places where you leave and enter the trade, no matter what. You can't overtrade something or revenge trade something that you already have a really clear target and stop loss on, because that's really my biggest thing, is not taking a trade till you understand clearly how you're going to trade that trade.
Yeah,
So.
we talk in the main chat and we're like, where did you enter? Kind of like go through the trade with somebody. I will revenge text Holly instead of revenge trade and text him 12 times in a row. This is what I did, instead of getting into a stupid trade. Just kind of having your circle and your support group, I think, is huge for that, to not fall into that pitfall.
Yeah, I agree. And like what Emma was saying,
There we go.
usually you're breaking your rules when you're doing that. So if you just follow your rules, you're good. Oh, I see your screen's up.
Yeah, Rita, you're good now.
Okay. I apologize if I'm cutting anyone off. I think the last thing that I said earlier was that first of all, want to massive amounts of appreciation for every speaker that came up. We've worked with Jake in the past. We've worked with Peter Tuckman. For anyone who doesn't know or is not following me on Twitter, or none of the influencers that we work with on Twitter, Aries is a brokerage. We're available in 130 countries, and 124 of those countries are the only way that you can trade without paying stock and options commissions. You can trade stock, options, futures, index options, cryptocurrency, mutual funds, IPOs, kind of whatever you want on Aries. And as of today, we are the fastest growing trading platform in the United States by far. I'm not sure how many people have paid attention to Aries over the last 2 months or so, but we just last month we raised a little bit over $1 million from our customers. So about 700 of our customers or clients in the United States are kind of participating in the Aries upside. We are a venture capital backed organization, and some of you may know me from my last company, which was a market data and analytics play. We sold all kinds of weird, wacky stock market data to anyone you could imagine. We had 70,000 customers. When we sold that business in 2019, the last thing that we did was we asked those customers, like, hey, what's the biggest problem in the space? To our surprise, many people came back with a problem with their brokerage. It wasn't some kind of tool or something that we could build. Most people came back with a problem with their brokerage. So going into 2020, we set out to build Aries. We initially built it on top of TradeStation. We helped pioneer the TradeStation API, which now I think over 200 applications are built on top of the TradeStation API. We built Aries on top of that API, and I think last year we grew something like 586%. Today we're at over 10,000 active clients, fastest growing in the United States. Yada 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 yada. But the thing that I'm here to talk to everyone about is the place where you're placing your trades. What most people don't recognize, I think, is that you are pretty much getting screwed. Even if you are paying commissions, you're getting screwed. Data is not coming in as fast as it would on an institutional grade platform. Your orders are not hitting the market as fast as they would if you're using it if you're not using an institutional grade platform. And the stock market, believe it or not, is a fair and open game where things like execution speed matters. And like something that I like to brag about when I'm on Spaces or on Twitter or whatever is the reason we're growing as fast as we are is I encourage everyone in here to go and place one trade on Aries. If you open an account today, deposit $500, we'll give you $100. If you go and you take that $100 and you place just one trade, I guarantee you it is faster. I mean, you're going to be able to see the speed difference. And if you want to break it down into numbers, we are on average filling an options trade in 0.1998 seconds, which leads to a per contract advantage of $3 versus any other brokerage in the United States. A per contract advantage of $3. I mean, those things add up, right? And I think that in general, people don't recognize, like, hey, if you're trading an SPX option, for example, and SPX goes for you. Let's say your option you bought it $1, and now it's at $1.50, and you're trying to get out, and SPX tilts the other way. Well, if you set a limit order at $1.50 and only one person gets filled, well, if you don't have the ability to replace your order with a proper speed, with proper execution speed, or even potentially get filled at that top, then it doesn't matter how good of a trader you are, right? It doesn't matter. If somebody on the other side is competing against you with better technology, is able to get their order to the market faster, it is able to get past your order being scalped in the middle, on a Webull or Robinhood or even some of these commission broker. Well, the reality is it does not matter, right? It does not matter for day trading or active investing. And I think that's primarily the reason we're growing as fast as we are. Now, what I'd like to spend this time on is, we could spend some time just kind of showing you areas. Obviously, like this is our web platform. It's a full trading view integration. You're going to be able to trade from the chart. You have the active trader where you can enter an order with one trade. You have all your trade. Everything can kind of be dealt with on this screen. And then if you scroll up, you have the options chain, where you can buy and sell between the options. If you go back home, this is the home screen where you can have like your watch list. You can switch between your futures account, your margin account, your forex account. You can open a limited number of accounts, so you can have a margin account and a cash account, and instantly switch between the two of them. Move over your cash. That way you can sort of get around the PDC rule. You have your positions down here. You have your recent orders or your open orders over here, and then at the very top is a free options flow. It's a full-featured options flow platform. Data comes directly from the exchanges, and we're building in more and more widgets every single day. We're available on web and mobile, and I can talk about areas all I want really, but the proof is in the pudding. It's free to open an account. If you deposit $500 or more within 3 days, we'll match it. We'll give you $100. And actually, if you open an account during this webinar, we have a giveaway going on. Maybe Casey can post that link somewhere. If you open an account during this webinar, someone in the audience that opened an account during this webinar will also get their $500 matched. So we'll get a free $100. Everyone will get $100 for their first deposit. But then everybody else, if you enter this giveaway, we're going to pick a couple of people to put a $500 trading credit into their account, plus a couple of Aries hoodies. Basically, I'll shut up now. And what I'd like to take this time, if anyone has any questions about how a brokerage works, how market data works, any questions about payment for order flow, any questions about execution speed, whatever you have about running a brokerage, I'm happy to kind of sit up here and answer whatever questions you may have.
I have a question because I paid like $4K in TOS fees in the last year. Why is it? You might have said this, but for everybody listening, like, can you explain what kind of fees they're paying on something like TOS or Webull or Robinhood versus the fee list with you, like how it adds up?
Sure. Let me sort of bounce back. Let me peel that question really quick. I think it's a really great question. Most people get scared when they hear commissions-free trading. I will say that we are not commissions-free on everything. Aries operates on a loss-leading model. We don't charge for stocks and options, but we do charge for futures and index options and IPOs and mutual funds, et cetera. And the cash that we're making on futures, for example, we charge about $1 on a futures trade in and out, so 50 cents to go in, 50 cents to come out per contract. On a futures trade, it's a little bit less on the micros. But it costs about 4 cents to route an options trade properly. So if it costs 4 cents to route an options trade properly, and we're making about $1, minus fees, etc., on every futures trade, we can pay for about 20 options trades with one futures trade. So we actually push your orders directly to the market. There is no, we're not prioritizing payment for order flow routes. We're not prioritizing routes where we're not prioritizing any route except for the route that gets you the fastest and most liquid order. And that's the first part of it. Thinkorswim already does that. Obviously, you're paying for it on Thinkorswim and you're not paying for it on Aries, but Thinkorswim already does that. Now, something that we do that's different than Thinkorswim, and the reason we can be a little bit faster than Thinkorswim or Schwab, et cetera, is, I apologize for a little bit of a history lesson, but in like the early 2000s was the introduction of electronic trading. So talk like think like 2000, 2001, 2002 was the first generation of electronic trading. That was back when E-Trade would send you a CD-ROM to your house and you could trade from your house. And then about 10 years later, in 2010, 2011, you got the second generation of brokerage. The first generation is the CD-ROM. The second generation really turned into this full-fledged electronic trading where you can start trading from your phone, you can swipe up and you'll get some confetti, etc. It's been about 10 years since then, and we really haven't had a big change since the second generation of brokerage. So Aries is what we call the third generation of brokerage, and if we're going to call ourselves the third generation, well, first, we have to have a better commissions model, so we pioneered the smallest leading model. But second, our technology, I mean, look, Thinkorswim was built in 1999. So, it was built by a Ukrainian dev shop in 1999. That was the first generation of Thinkorswim. And what you used to have to do to process stock market data, 20 years ago, 15 years ago, was you had to set up all these servers in the middle. So the data would come from the exchange and then it would have to hop. It would hop to this middle server where they can kind of collect it and parse it. And then it hops from that middle server to your screen. That's pretty much all brokerages that were built in the last 15 years. And it's the same thing on the back end. So if you place an order, the order has to hop from your screen to a server that's in the middle, and then finally to the exchange. And Aries is built. We're built in Google in a plethora of Google languages. But Google built Golang and Flutter to process all the data that they had. Right? Google has all this data. They're like, fuck, all of this hardware. It does not work for us. All of this software does not work for us. We're going to invent our own coding language. So they invent Golang and they invent Flutter. And we recognized about 2 years ago when we were setting out to build Aries that the same languages that were built to process all this data at Google can be used in trading because we're also processing all kinds of stock market data, millions and millions, sometimes even billions of data points and variables are changing on a day-to-day basis. And that means that we don't have to have servers in the middle. If you're using Aries on web or on mobile, your screen is directly connected to the data that we're getting from the exchanges. That means your orders are directly going to the exchanges, and the data that the exchanges are pushing back are directly coming to your screen. There is no middle server, there's no hopping, and that adds an extra layer, right? So, we've hired an independent firm called S3 Technologies to come in and test our executions being kind of verified. So yes, we're just as fast as a Thinkorswim or a Thinkorswim or a IB when you're and you don't pay commissions. But the reason we can be faster is because, frankly, our technology was built in the last 2 years, and we're competing against 20-year-old, 15-year-old, 10-year-old technology, and we can push orders directly to the market. We have data directly on your screen and in your browser, and we don't have to worry about crashing, etc.
Is there Canada? Someone said they're trying to do Canada.
No. We are gunning to be the first commissions-free brokerage in Canada. We're expecting some approval around sometime in this year. Canada's pretty difficult to get into. The reason is the Canadian ROC, so basically the Canadian investment body, is they make different rules for different applications. Some applications have to have an office in every province. Some applications do not. And payment for order flow is banned. The reason we're in 130 countries is because we don't rely on payment for order flow. Our business model does not require a payment for order flow. We work on a loss leading model. So that same model can work in Canada. It works in the United Kingdom where we're the only no commissions brokerage. So we're trying to get into Canada right now, but we're waiting on that approval.
Now, and once you guys are in, they're good. Once those thresholds are pushed through, that's at least something. Do you guys have the Webull and Robinhood will close you out 30 minutes to close or 15 minutes? I was texting you about that, Rita, a month ago. How does that work? People are asking.
Yeah, that's a really great question. So we are right now, if you call in and say, hey, I can manage my orders myself, no one is going to close you out. So today we're built on top of TradeStation. The trade desk at TradeStation, you'll be able to get a call in. You'll be able to get a call in 2 minutes. If you call in at 3 p.m. and say, "Hey, I can manage this trade myself," or you're not gonna have to worry about being closed out. You only got to call in one time per month to be added to that list where we won't automatically close you out. Now, if you don't call in, we'll close you out at around 4 p.m. depending on where the stock is. Like if you're in the money or if you're close to the money, and and your exercise value is 10 times higher than your account, then unfortunately we are obligated to close you out. But you can always call in at 3 p.m. and say, hey, I'm going to manage this position for myself. And then if you do that once, a month, you'll never be closed out. That being said, we're also working to make it automatic, where you can request that to be added to this auto managed list.
Perfect. Yeah, and then so once they open an account, click and start to go through the process, their account setup has the TradeStation interface, and so there's some confusion there. But you guys, once you set up through that, you're linked through Aries, their partnership.
Yep. Yeah. So anybody with a TradeStation account can log into Aries. The reason we did that, out of full transparency, is we had no idea if anyone wanted to use our product. So it costs about $10 million, between $5 and $10 million in the United States of America to get a broker-dealer's license and prop up infrastructure. So we decided, like, hey, we're not going to pour $10 million. Even though we just sold the business and we have some cash, we're not going to pour $10 million into creating a company that we don't know anyone is going to use. So we went to TradeStation, who was a client of ours at my last company, and we said, hey, we will build out your enterprise API, and in exchange, you guys will give us access to commissions-free stock and options trading for 5 years, etc. And we released Aries a little bit over 2 years ago. It's obviously grown like a wildfire, and we just recently received FINRA and CIPA condition. Basically, in 5 months, we will no longer be on top of TradeStation. We are actively working to move away from TradeStation at the moment. We're building up all of our own infrastructure, and you'll automatically be moved over if you open an Aries account. You don't have to worry about anything. But today, as it stands, yes, you open an Aries account through TradeStation. You log in through TradeStation, and it will be completely Aries, including the commissions.
Cool, sounds good. Any other frequently asked questions to address? I'm looking forward to checking this out. And I was on my mobile, because I don't like the TOS mobile apps. I only like it on the computer. But I really like the Aries mobile charts. It really loads nicely on my phone, so I like that.
Yeah. I think there's a lot that we're working on. Like today, today we're actually actively integrating the entire trade. We have a partnership with TradingView, and the entire TradingView library is built into Aries Web. I'm not sure if I had showed that a little bit ago, but what that basically means is that anything that you can get on TradingView, including custom indicators, loading layouts, trading through the chart, we have a pretty basic view of TradingView that's running on our data. So it's a TradingView chart that's running on Aries data. In about a month, it's going to be running the entire TradingView library is going to be live on Aries. So a multi-chart, full chart, trade through the chart, etc. Anything that you'd be able to get with a paid TradingView platform directly inside of Aries on web for free.
Cool. Thank you so much. Really appreciate it. Thanks for being here.
I have a TradeStation account. Can I open another account with you? If you have a TradeStation account, it's very simple. Just log in. Just download Aries, click login, and you will automatically be prompted to go into it. Yep.
Cool. Awesome. I really am sick of hearing about these other platforms. I'm looking forward to hearing more about Aries and your growth. It's awesome.
Yeah, no problem. If anyone has any questions at all about how brokerages work in general, I'm also happy to answer any question like that. I'm more than happy to sort of walk people through. But how long does it take for deposited cash to settle? If you have an Aries account that is active, we will process instantly. If you have an Aries account that's just opened, we might give you up to $1,000. Usually it starts at about $1,000. But as you build more history with the firm, you can obviously get to a higher level where you're being added.
I told a friend of mine, I think it was TOS, I go, yeah, you just open it up and, and he was like, it won't let me. And I go, oh, well, I've had my account for years. He couldn't do it within an hour. Exactly what you're saying. Totally normal to kind of have a little history with the brokerage to be able to move money around quicker.
Yeah, definitely. And, actually part of that is just the risk that's associated with it, right? So if KT, for example, if you were to open a trade, right, and your cash isn't settled, well, we're fronting you your cash. And if your cash was never settled, and let's say you lost on that trade, well, now, now that's our loss. It's the same thing on the back end, right? If you won on that trade, well, you're still entitled to those winnings. And if the trade never hit because your cash never came through and the settlement time passed, well, that win is also coming from us. Any promos for those who want to transfer from Webull? Yeah, anyone who wants to transfer from any other brokerage, if you DM me directly on Twitter, I will make sure that you get your ACATS fee, squawked at your other brokerage. We'll match your ACATS fee. If you deposit over $500, we'll give you that free $100. And you know what? Like I said before, exclusively for this webinar, anyone who opens an Aries account, the proof is in the pudding. Just place a trade yourself, and you can. If I'm a liar, then you can find me anywhere on any social media and call me a liar. But there's a reason we're growing as fast as we are. And that reason is because you can see the difference. So the reason we have that deposit promo up is because most people who open an Aries account, you have a 71% retention rate after the first trade is placed. And this is unheard of in our industry. Our average session time is 47 minutes, 2 times higher than Robinhood's. And our average success, so what we deem as success, people who don't blow up their account, is 6 times higher than the industry average. 6 times higher than the industry average. We have people not blowing up their accounts, and people growing, right? Maybe not growing a lot, but people growing, which is really kind of wonderful to see. It's at Retta Fada on Twitter.
Yeah, and I have it in the Padlet is everything, guys. Retta's social media. If you want to compliment his beard, make fun of his hat, I don't know, whatever you want to do, tell him, hey, it's really fast brokerage. Everything is in the Padlet, the sign-up link for the Aries, and somebody that's in here right now is going to get $500, and it's not going to be somebody who is asking questions that are easily in the links. I'll tell you that right now. So, but yeah, I really appreciate you being here, man. It's really cool. I know you had to wait a little bit. We had some tech issues and whatnot, but like you said, who cares about Retta? He's a nice guy, but if we're making fast trades, that's what we're here and we're about. You know what I mean? I don't care how nice and charming he might be. If it's not executing quickly, that's everything. So if you make a trade this week and it works, add him and say, wow, amazing, I'm Aries fan, whatever it might be. He'll retweet you and all that. He's obviously trying to grow this, and so it's really cool.
Yeah, I think that's the link that will that will get you that bonus. Something that's interesting for us is we're all engineers. Everyone on my founding team is an engineer, and everything that we do on Aries, every data point is tracked. From the time that you sign in all the way to the time that you sign out. Every single thing is being tracked, from how many seconds you're spending on the screen, which buttons you're clicking, etc. Everything on Aries can be done in 3 clicks or less. And really, that's what I mean by that is that means that if you wanted to set up the active trader on Aries Web, you can enter and exit an options trade with 1 click. But what I mean, really where the value comes is a lot of our clients will be like, hey, I only use mobile on Aries because it's all there. If I want to take a complex spread, I can do it in 3 clicks or less. If I want to take a future trade, I can do it in 2 clicks or less. And there isn't any clutter. Very soon here in about 6 months, we're going to be releasing Aries Pro, which is our downloadable desktop client. So think of it like a Thinkorswim competitor, and that will be the last sort of niche in our product suite. And then towards the end of this year, we're actually open sourcing all of our software. So everything at Aries, all of our platforms are going to be open source. You're going to be able to go to our website and see exactly how every single widget is built. People will be able to build their own widgets, but more importantly, they're going to be able to see the sort of the transparency in how we're fetching data from the exchanges, how we're pushing your orders to the market, and how. And I believe that transparency will sort of light a fire, right? For example, right now, if you wanted to build anything in the fintech space, it's really, really hard to get access to proper infrastructure or to see what's possible. Our sort of North Star metric is when we get to the point where we have a complete product suite, and you can go to our website and you can see that it's all open source, all built on Aries in-house integrations, and then use our infrastructure and our API to build your own products and your own tools. You want to build an options flow tool? Sure, you can use the Aries, the Aries API. You want to download a bunch of stock market data and track against it? You can do that with the Aries API. You want to build a widget for Aries Pro? You can do that with the Aries API. That's sort of the end goal here. Is I think that, right now, if you think about trading in general, people, I think, try to shy away from this, but when you're trading, institutional investors think retail investors are dumb. This is the truth of the matter. Institutional investors believe that you are dumb. And I think that the reason they believe you're dumb is because they have, retail investors get squashed every single year. And my belief system kind of goes back to, it's not that retail investors are dumb. I believe that if retail investors don't have access to proper tools, and if you were playing a game of basketball, imagine the institutional investors hoop is this low, and the retail investors hoop is regulation height. That's the game, the institutional investors, regulation height, you guys are shooting regulation height, and institutional investors are shooting to the ground and making goals. That's kind of what's happening. And I think that the second that we can sort of level these hoops is when we're going to start to see some real data come out about retail investors. There's a reason why our investors are more successful. There's a reason why our technology is pushing towards being open sources. Because really, the thing that I want to prove is that if we're the brokerage on the back end and we just give people this open financial infrastructure where they can use our platforms, they can build their own platforms, they can kind of imagine it like Stripe for the financial world, then I believe that we're going to get closer to leveling this playing field, and that's kind of the end goal here.
I like the stopgap you guys are filling. That's really cool. Like you said, people are frustrated with the current options. I really think Aries is a good option. I haven't been on desktop like you have on your thing, but of course the mobile. Can you open it and go to a chart right now just to kind of show everybody, or?
Yeah. Give me 1 second.
Yeah, and then we'll finish up. But I just think it looks really clean. Even the green and coloring, it looks not cluttered.
Yeah, and keep in mind, like I said before, we are launching a pro platform that will be very similar to a Thinkorswim. That's launching in exactly 5 months from today. But what you see right in front of you is our web platform. This is in dark mode. So I have my this is the most active stocks on Aries. This is the watch list, whatever. Then I have my futures account, my forex account, and then the top news, and then all my orders here at the bottom. Let's, for example, go to SPY, right? So if we were to, here we are at SPY. This is the trading view integration. We're seriously beefing this up here in the next 3 weeks. You're going to be able to multi-chart, import, export trading view layouts and custom indicators, go full screen, etc. Trade from the chart as well. But it's fairly simple. You have the stocks details, and if you click this trade button, you have your recent orders, your current positions. Anything can be managed. All your orders can be managed from down here. You can click on anything and manage it from down there. You have your positions, this is the January 16 contracts for SPY, and kind of where most of the activity is. And then you can click the options chain, right? You can buy and sell, kind of take as wild of the spread as you wanted. Obviously, we also have this active trader where you can configure it so that you can set so you can do two things. You can say, hey, I want to take 5 contracts every single time I press the active trader.
Yeah.
Or you can say, I want to take $10,000 every single time, and we'll round you automatically the amount of contracts it is to hit that $10,000.
TOS, I cannot do the dollar. I have to do contracts. So I like the dollar.
Yes.
Cool.
And something I want to mention here is, KT, if you join our Discord, we have a full 9-person development team that's focused exclusively on user suggestions. If you make a suggestion for Aries Web or Aries Mobile, 2 weeks later, it will likely be in our web or mobile app, if it makes sense, obviously.
Mm-hmm, yeah.
Most of what you see in front of you has been built right around our customers. We build completely in public, right in the Discord. People ask us for stuff all the time, like, hey, Retta, I want the ability to be able to set a stop loss on a percentage. Right, so we added it. Right, you can set a trailing stop loss by 20%, and it will trail by 20% instead of having to do it by just by dollar amount, which of course you can also do. You can do that with a bracket order, you can do it with whatever. But going back to this active trader, so we set a $10,000 lot here. You can do pre-fill order on tap, which means so What that means is if I go back to this active trader and I double click one of these so that I can bring it up here, I can bring it up here to the right so you can see now I have the SPY call in here. If I click this one, right, it'll pre-fill this order here on the bottom and I can enter it, right? But if I wanted to automatically send that order out, I can go back, click automatic send, and it will automatically route that order. At $2.88, send the order. I can also obviously sell it. Whatever. It doesn't matter. I can do whatever I want. Kind of. And you can see here, your orders are right here. I've got 36 open on 288. I'm sorry, 34 open on 288. But yeah, that's the roundabout of Aries. Obviously, we have the free options flow built in here, which is pretty cool as well. A lot of people like to mess around with that. The historical flow, which goes back to
with the flow is a big reason to open up an account, because the sorting and looking at flow is integrated, and you're not clicking out of other screens and having to have another monitor. Jordan was putting up that flow, I think it was, and it's just really cool that you guys have it integrated, and it's a multi-use platform.
Yeah, I mean, we're building in tons of more widgets. We're building in dark pool. We're building in fundamentals and sentiment, all kinds of things. By the time that we release Aries Pro, we hope to have about 26 user-suggested widgets, and that will mean, so when you build your Aries Pro canvas, you'll be able to drag and drop whatever widgets you want on your canvas. You'll be able to make different canvases. So you can have a screening canvas, you can have a fundamentals canvas, you can have a charting canvas, and you can drag and drop whatever you want and switch between them and share them with other people. I think it's going to be really cool. And keep in mind, all of our data is coming from boxes in the exchanges. Right? Most options flow providers, they're buying the data from somebody like me at my last company, and then they're relying on that person to make sure the quality of the data is up to par, and then they're charging you $60 a month for the same data that you're paying for at your brokerage. All data tools at Aries are free, and they will continue to be free. We even have a Discord bot suite, which I think we launched 7 of them last week, where you can have Senate trades, insider trades, whatever, directly in your Discord. That's free. All of the widgets that we're building in Aries Pro will be free. But if there's something that's missing, you can literally come to us in our Discord from one trader to another and ask for what you want, and we'll vote it in the community. And if it gets added to the roadmap, in 2 weeks, we do a major update every 2 weeks. In 2 weeks, you'll see your suggestion live on Aries.
Thank you so much.
Yeah. Thank you, guys.
All right. Appreciate it. What's up, Holly? Who's next?
What up? While he was talking, I set up my Aries account, so it's good to go. Dude, $300, hook me up. Plus, I actually use Webull still, so I will most likely switch all that over. Also, I can't hear anything.
Can you hear me?
Yeah, there we go. I can hear you now.
Good. Are we ready? I wasn't sure if you were
yeah.
KT or. Okay.
Oh yeah, go for it. Sorry.
Okay, rock and roll. What's up, guys? All right, I'm going to screen share again. I'll do a quick little overview, 3 or 4 minutes of what we already went over, and then we'll go from there.
Anyone that's setting up Aries right now,
people that missed the first part know what we're talking about.
Yeah, perfect, Amy. And then anybody setting up Aries right now, if you DM him, he's manually approving everybody right now. So, as Amy's talking here, you could do that, but I'm looking forward to getting this chart going, get back to trading. Aries looks cool and all, but at the end of the day, I'm a TA junkie, so I'm going to be listening to Amy.
Yes. Sorry if you hear the dog barking too. He's playing with my hubby. All right, so here we go. We were talking about trading psychology, and we were really trying to hone in on, because I feel like a lot of you, especially if you're in this, let's be real, if you're in this listening right now, you have looked at the chart. You can probably see a trend line. You could identify that we had a little trend line sitting right here, that we hit our head. Like, we can establish that simple stuff. We can see a volume bar. I don't know why my volume's not on. Sorry, guys. There we go. We can see a volume bar. We understand bigger bars, bigger volume. Like, the basics are there. Trading is very, very simple but it's very complicated. And what that means is that the once you get your niche of what you like, your edge, once you establish that, it's a lot about psychology, but past the psychology, especially in options trading, it's understanding what the best contract is to take, how to figure out your targets, and how to figure out those stop losses. And that's what we were talking about a little bit, and I'll go over it and more as we go. But we started with, we were talking about this chart here, and we talked about each of the clean breakouts that coin had over the last year, all right, since January 2023. All right, and I drew this because each breakout was almost exactly 150 to 160% each one. All right, and so if we were to pretend like this last breakout didn't happen, and we had already identified we're testing these breakouts, and each one we could clearly see we're pulling back, and because I use the fibs for those fib level here, which is a low to high, and I'll go over it right now on fib retracement, on TradingView. I'm not going to go over all my little secret sauce stuff from the Discord, but these are the levels I use. I use the 618, the 0.5, the 0.25. That's it. Within the 0 to 1, those levels, if you want to know why, you need to come to the Discord. I'll tell you why. But anyway, so we can see this is where we're at. We saw the clear breakout. Each one was 150% for both of these. All right, this is all going back to how to figure out our targets and how to figure out our contracts and how to know when it's continuation versus reversal. So we stopped selling $500 contracts for $60 profit and exposing ourselves to hell risk. Because this is what it comes down to, guys. All right? If we have a contract, we're buying. And we buy 6 months out, and we spend $1,200 a contract on that. Yet we're cutting our profits on, like right here, we buy some contracts, and we're on the daily here. All right? And we're cutting those, we're taking all our profits, and we're totally out of the trade right here. Within 3 days, even though we went out a month, we went out 6 months, we went out even 4 weeks, but we're cutting it within 3 days at this point here, but at the same time had no clear stop loss established. The more you trade in that blind spinning trading where you really don't have a clear thesis on your trade, you will not stay successful trading. I hate to say it, it sounds harsh, but it's the truth. So we've identified this is our golden pocket, my golden pocket. I know golden pockets vary to some people. I want to know my 618 to my 0.5 box. I drew it in gold right there. All right, cool. So we're back testing this trade to see what we want to do now. This pullback. How are we going to know what to do next on coin? All right. So we had breakout 1, and when we had breakout 2, and I accidentally deleted this, and then we had breakout 3. All right. Oh, that's not what I want. There we go. So we're at the second trade now. So we pulled back exactly to our golden box. All right. And I'm not talking about when to take entry right now. I'm just talking about how we see this continuation. All right. And then the second trade, same exact thing happened. Let's pop a fibs on there. Look at where we bounced. Like absolute perfection. Sat and traded sideways in the chop. All right. So on a trade like this, where would we want it? We already established we see we had 150% here. We had 150% here. All right. We're pulling back. First of all, when do we draw the fibs on them? When do we understand that pullback level? And for me, there's two clear things with this. When I put a fibs on this chart, once we have a meaningful pullback, meaning we pull back at least that 25% line right here, I'm putting that fibs on, I'm getting my level set up because I want to understand the reversal versus the continuation, where to take the entry. But anyway, so if we rewind to the end of October where the whole market broke out, coin was one of them, obviously, and we had this fib sitting there. We had this one, and we had this one. And we're setting up this range here. You know what? We want to know time, too. What's our time on this? How long is this taking? Because that's the second part. We've got the move. It's 150%. How long is this taking? All right, so let's do some time on this. Let's figure out our dates here. All right, let's figure out from our top to the 618. We want to measure that because we've got it twice here. All right, so from our breakout to the pullback right here was approximately 60 to 65 days. All right, it's about 60 days. All right, let's check the next one from the breakout to the pullback to us ending up at that 618, because this is all gonna make sense in a minute. All right, so here's our second one. All right, we're at 65 days there. And then let's measure how long it took after that first pullback to the breakout again. Let's just for shits and giggles, let's measure this one. From the pullback when we finally hit that 618 to the next time we started breaking out again. All right, 87 days. Let's check that again. Now this pullback, let's check it to the breakout. 73 days. All right. So what does that tell us? We've got these ranges. We understand 60 days, 87, 65, 73, all within this 15-day range approximately. All right. And this matters. Why does this matter? Because we're trying to figure out when to expect that breakout. All right. When do we expect that breakout? And actually this one should be here and this line should be there. Okay. And when do we take entry? Where's the confirmation to take entry? First thing we have already established at this point is we know it's 150%. We know it takes approximately, if we go just to the breakout, we know it took approximately 24 days to get there this time. All right. 31 days to get there this time. How about this one? $70 days. Oh, sorry, this is not right. There we go. 51 days. So if the average of these three is going to be approximately 40 days or so. All right. So let's look here. And we have a bell. This is how the options curves kind of work. All right. So it's like a bell curve. All right. And when we're taking an option contract, we want to sell here. And we want to enter here. All right. And then this is all our profitability. Once we hit the peak of a bell curve, the contracts start to work against us a little bit. All right. So with what we've established here, we know that these are approximately 40 days for these breakouts each time. This one was a little longer, but it was a very strong push. And actually this one should probably be here. That would have been our confirmation. So it should probably be about 44 days. So 44, 31, and 24. So say 35 days is the average it took for this 100% and 50% breakout each time. So at that point, what I want with my option contract is I want double the expected length I want to hold this contract. If I expect to hold this contract for 45 days on average, all right, this 45 days is how long I expect to get the target range. That means I want at least 90 days on the contract, because we don't want the contract to work against us. We want that peak profitability before the theta starts to kick in. All right? So we want double on this. So what does that mean? That means for each of these, we would go approximately 40 times 2. We're going 80 to 90 days out on these contracts. All right? And we'll go over that when I pop on over to Options Strat website in a minute. But for what's next? All right, because and I'll go over firm really quick too when we're done with this. So what's next for TradingView? All right, I mean TradingView for coin. We've already established our 150% pullback, goes 150% breakout, goes to the 618 level. We've established that here, and we've established that here. So let's put it on our current trade. Now, can anyone guess where we think the pullback's going to be this time? And where we are right now is Very interesting, because we are sitting right at the top of that box. So when we have a chart predetermined like we do, all right, where we have already identified the tendencies, it likes to push 100%, 150%, it likes to pull back to our golden box, and then it likes to push out 150% again. It did it here, it did it here, and it did it here, but on this one, when we did our pullback, we lost that support. We couldn't hold it. But we did have the same exact thing, the 150%. So, how would we decide to take this trade? Let's set up exactly what trade we want to take for this. All right? We know, A, how long it took there. We also know how long, because here's the hit, guys. We also know how long coin tends to trade in chop, tends to sit in chop. This time, it sat in chop for well, actually, it would be right there. We sat in chop for 63 days. This time, it was actually 84 days there, all right? From this point to this point, so we had 84. And then from that line here to the break, okay. So it's actually exactly the same, so 81 days. And we know that the average is that it took was 30 days, so let's draw that line right here. All right, we're going to delete the fibs. We have our box. We know we're watching. And let's draw a line right at the peak, so we know where to put this. And we don't have to do it this way. You can visually look, whatever else, this or that. So if that's where we're at now, that's where we expect our chop to be, is approximately to this area here. So here's the thing. It could break out. It could bounce off this level immediately tomorrow and continue to break back out. But we know that when Coinbase pulls back to that golden level, it tends to sit and chop in there. And it also pulls back to the 618. So what we're watching, and let's even take a little time off. We'll put it at 80 days. We'll give it 10 less days, all right? So what we're really watching is for coin to make a directional move, a directional decision around the middle of March. And that we could possibly trade sideways until this point. It could be shorter. We know that. But we also know it likes to pull back all the way to the 618, which is at the bottom of this box. All right? So how are we going to take this trade? What are we going to do? If we want to get in the trade, once we get that green light and we get that trigger, we know we have to account for this sideways trading. So what we're watching in this trade is two things, all right? I want to see the pullback to our 618 and then the break back above our 50% retrace and then a weekly candle to close above it. So we want, this is what we're looking for with this trade in particular. We want to pull back We want to pull back at least to $120. I don't think it's ready. I don't think it'll immediately bounce off this. And if it does bounce here and doesn't continue to pull back, I think it will. That's what I'm saying. We want to pull back to 120 and then a weekly close back above 127. And this is how you don't get caught in a trade, sitting in the chop, you know, and then it ends up working out. But what happened? I didn't get the trade. All right, so this is what we do want to see in this trade. And why we want to see that is because we want it to pull back to that level historically it should pull back to. All right, so we want to pull back to the $120 area and then the break back up. At the very least, we need it to pull back below 125. All right, so what we're watching this week is that. If it starts to immediately push green right now, I'm not taking the trade. Why am I not taking the trade right here? Because it doesn't fit my risk-reward profile. And it doesn't fit my trade criteria. So if I miss the trade, I pass on the damn trade. I get the next trade. I want to see it pull back into our box and then break back out. And at that point, what is our target? All right, what would our target be and what is our stop loss? I'll tell you. My target, one, is the 25% retracement, because this is a level we're going to probably have a little bit of resistance at. So this is my target. And then my stop loss is a weekly close below that 618. So if this green is our target 1, full retrace is target 2, and then our stop loss is the loss of this area, because if we lose that 618 and have a weekly candle open and close below it, we've lost that golden fibs area, that magic zone that we're watching. And what's beautiful about this trade is the following. All right, we take the trade when it breaks back above 127. All right, so we have established, and we want to make sure we have a risk reward that makes sense. All right, so this is our reward box, because this is where we'd take the entry to the trade. All right, and here's our risk box. All right, and you should, I mean, honest to God, I suggest drawing this on every single trade you ever take if you can't really do it in your head, or you're a visual learner. Because what does this box tell us right here? It tells us that we have a 1 to 3 risk reward on this trade. Boom, boom, boom. 1 to 2.5. All right, that's what we want. Those are the trades we want, because these are the trades that we can take that give us the ability to have under a 50% win rate and still be green by following these rules no matter what. No matter what. All right? So that, and then find your edge. If you don't like trading with fibs, that's fine. This same chart, we could see the same thing without even putting fibs on it. We could do just measured move sticks. The size, instead of putting that on, you put the stick, here's our measured move, and it's the same length throughout, and then a measured move pull back. Doing these things teaches us how not to have our emotions and our personality start creeping up. It's our bad habit. Our emotions are our drug, and it's set up to screw us. So when we can take a trade where it's simply the math, perfect. Not all trades are going to be this perfect where it pulls back exactly this or exactly that, but it is the same purpose each time. So we know we're looking for a pullback to 120. We know we're looking for that weekly close back above 127. We know our risk reward is all good because we've looked at it. So as long as we hold that 618 down here, I actually went way too deep on that. As long as we hold that 618, we don't have to freak out about our trade turning red. Why? Because, I'll tell you why, because hold on, let me pull it up. We pick contracts that aren't going to screw us by letting them play out a little bit. We have confirmed and figured out how to find our contracts, what we need, so on and so forth. So if we're building, this is amazing. Guys, forget that long option calculator or whatever the hell it's called. Option strat, even the free, is fantastic. All right? This is, if you aren't good with, and I'll tell you what, I'm a spread connoisseur. I love taking a good old debit spread with my leap. But you can play around with this. It's amazing. Because what's great about this one is you can pick anything you want. It could be a bull put spread, whatever it might be, and you get to slide these around. And do you notice how, so for this one, it would be, buying the 30, selling the 35, whatever, and then once it slides here, it turns into a debit because of the way it's set up. It's a bull put spread this way. Oh, now it's a bear put spread. Like just playing around with this. But anyway, what I want to go back to is our trade. So it's amazing. And I will do another actual spread, a spread workshop as well. So if we go back to our chart, first of all, we know that historically, we know that these breakouts took approximately 40 days. And we know that it sits in chop for approximately 60. So that's 100 days. All right? We know we want to go out at least twice that. So that's 200. Give it 180. We want to go out to 180 days on that contract. And while it might seem like, oh my God, what if it breaks out this week? Who cares? I would rather, and I'm going to say this really slow because this This is it. This is the hit right here. All right. I would rather be the last one in the trade and have the least amount of risk than be the first one in the trade and have the most amount of risk. I will take 30% over 70% every day of the week if my risk reward is in order and my exposure to the market is in order. It's not about the home runs. All those gains porn, like that's what's the difference. I'm gonna pat myself in the back a little bit on this one. All that gains porn that you see on X is bullshit. Mine's not. These are trades. If I pull back up mine right here, all right, for all you that are not part of this Discord, and just to show you, let me slide it back over. Here's the thing. I trim the entire way. I'm down to 4 contracts here, down to 6. Double down snow. All right, closing 1 today. All right, you'll see twins the whole time. Closing 3 more of these today. And I tell you every trim I take. All right. So everyone, slight trims today. Closing 2 today. Took profits on all but 1. Still holding 1. This one had 5 weeks left. This is my affirm trade right here. I'm going to go over that chart real quick too. I'm not going to hold everybody hostage. That'll be really quick. But this was with 5 weeks left. And I had 1,427%. This Carvana, it's just insane. So ABBV, 145%. It's a March contract. I'm still holding one of those. This went up. ABBV is up like 500% now. Let me see. There's 291. And I updated the whole way. This isn't gains porn. This is playing proper risk reward. All right. So we want to go out, say, 200 days. All right. Let's pop up our coin. Let's find our dates, and we'll go out to 200 days, about 6 months. We'll go out to June. We'll go June. We won't go that far. All right. And do you see how here's where that bell curve I was talking about matters? Do you see how the further we go, all right, at the same price? Hold on. It's a put. That's why. I was like, that's not right. Hold on. Add a call. Buy a call. There we go. All right, and got the June up. All right, so which contract? First, we're going to go over this. Do you see how a contract right here at our 0 line is down 18% already? First week, or $18. Do you see how this same exact contract, as it moves on, you're losing the whole time, slowly. All right, like it's constantly churning. So we want to find the sweet spot, which is kind of like this line that goes up right here, this 0 line, as we slide up like this. So we're looking for that 200. We're looking for approximately 200 days. We're doing 6 months, a little less than 200 days. All right, because we're also going to account for the expected chop we might sit in. All right. So what else are we looking at here? We know how long, what price, what's our strike. All right, because this is where you're going to save the money, is picking the right strike if you have faith in your move. If our faith in our move is $162 for target 1 and full retrace target 2, we can literally pick even though we're way down at 120, we can literally pick where we expect it to be in the money at the end of the trade. All right? So we're giving it enough time that even though we're kind of far out of the money, we know that's where we expect it to end up. Plus, it's cheaper because of that. What I like to do is go just below. So if we have 127 be our entry, our target 1's approximately 160, I'll do 150. All right, I'll do approximately that. A lot of people get scared it's too far out of the money. No, it's really not. So these contracts here are approximately $1,100 or so. All right, so we said the 150, right? All right. So these contracts here, so the 150 call is about $1,300, $1,200. How do we make this cheaper? How are we able to afford this with a smaller account? How are we able to reduce our risk? Turn that baby into a debit spread. All right, if you have a smaller account, you buy your 150 and you sell the call just below it. So you could do 145, you could do 140. It's going to cost a little more when it's the 140. But here is what is really fantastic about it. All right? So if we buy that 150 and sell the 140, our credit is, oh, why do we have credit? Hold on. This is supposed to be a sell. Sell call. Buy the 150 for 2105. Oh, I'm an idiot. I'm backwards. Sorry. We buy the more expensive one. We sell the cheaper one. I don't know what I was talking about. So we would buy the 150 and we would sell the 145 or the 160, excuse me, because it's cheaper. So we go 10 out of the money. And when we have our sell leg, what I do, my rule of thumb is my sell leg, I'm going to put at my expected target. All right. So what we're doing, instead of spending $1,300 on the 145 call, by having this 140, 150, and 160, we're spending $315 with a max profit of $685. So that's a 2-to-1 risk reward on just our profit as well. And what that means is there's $10 in between these two strikes. That's always going to be your max profit. And then you take away how much it costs. So the most we can make on this is $1,000 total minus our $315 cost. I'm not going to get into spreads too much, but what I like to do is a spread like that for those of you that understand it. Because then what I do, and this is where it gets exciting, and this is where I make my money. Once we break that 160 and hit our target, I'm buying back, I'm cutting loose that short leg, meaning I'm literally buying back this. It's gone. This is no more. I bought it back. All right. Now I've got that infinite potential. I cut the leg, and all the money I made on the way up made it that much cheaper, and I got this for like a third of the price. And it reduces your risk and it reduces your cost basis. But I'll get into that more in a different stream. So that's what we're looking for, the pullback to the 125 to 120 to 125 area. I'll put 125. And then the break back above it. And on the what if we fall to the ground? Same exact thing. If we have a weekly candle opening, and that's the perfect part, is if we hit that stop loss and have that candle open below that area, we could switch to a put. And at the put, we would expect a full retrace. When a breakout loses that 618 pullback, all right? When it loses our box, 70% of the time, we're giving up the entire breakout. 70% of the time. So what does that mean for that trade there? And then I'll wrap up. I know it's been longer than expected. I wanted to do a firm chart too, but I'm not going to. That means we expect to come all the way down to here on that put entry, because 70% of the time, this is going to pull back fully because we lost that 618 golden mean. All right? And then where's our stop loss? If we break back above that 50% retrace. Look at that risk reward. That's like a 5-to-1 right there. We could lose this trade 4 times and it work out the 5th time and we still break even. And if we play swing charts with only that golden fibs level with the proper targets, I mean, we have really wrapped around being the most like our algos as possible. The spreads, I can go over spreads Thursday in here. Thursday morning, I'm going to do a spreads class. I'm going to invite someone with me.
Yeah, that sounds good.
So, yeah, I know that this is about a half hour. Yeah, I don't want to hold everybody hostage for too long because I already talked the other way. But real quick, the affirm chart, just 3 minutes, because this was a 1,400% trade. And I want to show you how I did this trade. All right? We're on this. I'm not going over all of it, but the same ideas. If we're on our firm chart, And we're looking at the last few breakouts. They look totally different, don't they? Some must be longer than the other. No, that's not true.
The bottom line
Right?
is AMA
If
finds
we
these
look at
plays
same
for
exact
us
thing,
and
price
tells us,
range.
AMA tells us
Let's check
exactly
this
what to
one,
play.
this breakout.
The
All
bottom
right.
line
Oh,
is
that one.
AMA finds these trades for us and just tells us what to trade. So everything she's
Absolutely.
saying, she tells us exact contracts and everything, and it's just really wonderful.
Absolutely, that's exactly what we do. So if you look at this trade here, same exact thing. 140%, 156%, 122%. Even this one was 100%. So when we broke out this next time, if we average out these last 4 breakouts, on the conservative end, we're at 100%. Everything else is bonus. This is how you get that 2,000% banger. We had it worked out where when we start to break out, of course, have our confirmation, this, that, the other, and we break out here, we expect 100%, but we went 118%. Would you look at that? It looks like way more here compared to here, but it's a bigger price. It's higher price. So it's the same range. I mean, when you look at this, the last 5 affirmed breakouts are all within this very definite range. And even that 96%, who in their right mind, when we get a 96% trade, and then let's measure the date range. Let's measure how long it took. All right. That one's about 35 days. All right. Let's measure this one. Oh, 41 days. Pretty damn close, wouldn't we say? Let's measure this one. 35 days. Oh my goodness. You got to be kidding me. Let's measure this one. 27 days. We know what contract to buy. We know we could go pretty far to the money. We know what push to expect. And if it doesn't work out, we take the stop loss. But when we have a risk reward like this, where we're literally measuring every single breakout, and we know they took approximately 35 days, let's check this one. What was it on this breakout? 32 days to the high. It had a little double top. 32 days. This is how I got 2,000% on the trade. 32 days, 100%, pick my contracts, went out to, and this was on March contract. I went out 4 months on these contracts, and we still got 2,000% because we knew what a firm likes to do. That's all I got, guys. I hope that makes sense. So that's how I pick contracts.
Yeah.
Use the bell curve. It's really important, that bell curve, and you really want to get in the trade here, and you want to sell by right here. And this is our zone. This is the dream. That's the zone we want to be in. So, and as far as like technicals and fibs, all that, I go over all that in the Discord. I just felt like it was really important to show all you guys that those gains you see on Twitter for us on those swings, they're not bullshit. These are not random trades taken simply because. These are planned out, and we know exactly what to expect. Yeah, same exact thing, and like these as well. Those measured moves, like this. I mean, the actual length measured move, where you take it, you slide it over, and that's where you would expect. Slide it over again. That's what you would expect. This one's of course bigger. But yeah, and then the pullbacks, having those zones, and with these we have perfect stop losses. We understand how where our stop losses are going to be at the loss of trend. If we took the entry here, I know that the loss of the last low candle, I'm out. I can let the trade go a little red because say it pulled back to this area here instead of breaking out, or like it did right here. Say we took the trade here instead and it pulled back and we were down like 10, 12%. It's okay. We got contracts far enough out where it's not going to destroy us. I don't care that I could have got 10,000% if I did monthlies on this. I don't care. So it's just, I don't know. That's the easiest way to put it. And I bet most of these worked out with the fibs too. If we pop a fibs on here, would you look at where it bounced? I didn't even talk about fibs on that. Look at where this thing bounced. I mean, I mean, this stuff is like this. None of these daily candles lost it. They were out hovering, but they stayed. This stuff is math and statistics, and the more you use an exact science and you keep it exactly like that, take your personality out of the trading. I mean, that's the most important part. And with this type of trade, where I say we could lose, if I put back on coin and I say we could lose 4 out of 5 of these trades, what does that mean? Because we're not going to be perfect. That means if 20% of our trades we FOMO in, freak out, take bad entries, and turn into a human again, it's okay. Because we already have it set up where we can lose over half our trades. So count that 20%, we could still be at like 50-50 and still make money. It's really, I've got so much I could do this stuff for, honest to God, a month. So that's just the tip of what I teach up in this Discord, guys. This is just one super simple lesson on how to pick your contracts to take a trade. That's it. I got more where that came from. Come check us out. And a little worthless plug. Anyone that signs up using my referral link in the next couple hours, I'm gonna give away. Actually no, I take that back. Anyone who signs up in general over the next few hours, I do one-on-ones. I will give you guys 50% off if you sign up for the Discord. DM me, show me you signed up today, and I'll give you 50% off my one-on-ones. I've got a few slots open. So that's a huge deal. You'll literally get the Discord for free by signing up for a one-on-one. So reach out if you guys are interested.